Hey guys, good morning, welcome to the live session of Stocks Network Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Hey guys, good morning, welcome to the live session of Stocks Never Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please secure.
Recording in progress.
Welcome everyone. Good morning. Thank you everyone for joining Stock Sniper Trading. My name is Ron. My partner is Dave. It is 7 a.m. Eastern. It is Monday morning, May 19. Welcome everybody, and I appreciate everyone joining this early in the morning. Hope everyone had a great weekend and ready for another week in the markets. Make note, next Monday, U.S. markets will be closed for Memorial Day. And SST will probably be taking a day off that day, just due to limited volume in the markets and U.S. banks being closed and Wall Street is closed. So if you do decide to trade next Monday, just trade careful, okay? We might come in, maybe I'll come in for like an education session, but we'll see how it goes near the end of this week. But right now we got to worry for today, and lots of news over the weekend. So hopefully you guys paid attention to some global news and geopolitical news, and big downgrade by Moody's on the U.S. From AAA, first time in over 100 years. They've been downgraded. They've always had a perfect rating of AAA, and now they've been downgraded to AA1. So we'll talk all about that. And we got a lot to do today, so make sure you guys have a drink, make sure you guys got some energy, you got some coffee, and we're going to go through the news this week. We'll go through all the earnings this week, and then we'll do some charting on gold going into Comex. And last Friday we did Dow Jones going into Wall Street. Today we can do NASDAQ, or we can do both. It just depends on time and how we go here, okay? So let's get started with the news. Forex Factory right off the bat here, so we don't lose too much time. So I'm going to go through each individual day, and we'll just highlight from Monday to Friday the big days that we should be considering for high impact or volatility. So today, if you have been trading through London and Europe, there was some news. We're moving now into this 8:30 block over here. In Canada, where I am today, it is actually a bank holiday. It's Victoria Day today. So all Canadian banks are closed, and we have a long weekend over here. So next week, next Monday, is US Memorial Day, but that one will impact the markets a little more than the Canadian bank holidays. We do have some speakers this morning. So we got FOMC member Bostic, Jefferson, Williams speaking. We got Logan, Kashkari, Bostic. Pretty much, remember there's 12 members of the FOMC, with Powell being the head chair, but there is speakers throughout the day today. They are low impact, but they still are speaking. So if you want to listen to these individuals speak, you're more than welcome to, and things like that throughout the day. And then going into Wall Street, we don't have much. Normally at 8:30 we do have some US red folders. We do not today. So today is just going to be like just a typical Monday. We don't have too much high impact news. Just trade with proper risk management and navigate accordingly, okay? And then we move into Tuesday. Tomorrow it looks a little bit more busier. It gets busy. Australia has 3 red folders over here. So if you trade the Australian dollar, you got your high impact there. You've got your rate statements. Looks like they're in Australia, they're looking to reduce the rate from 4.1 to 3.85. And then we move into Europe. We've got G7 meetings all week. Tomorrow will be day 1 of that. And then we move into 8:30 North American block. Canadian banks are open for business on Tuesday morning. We have CPI, month over month, median CPI and trim CPI and common CPI and core CPI. So a lot of CPI for Canada tomorrow. We'll see how inflation is going over here. And then again, we continue with speakers. 10 a.m. European consumer confidence. So we had U.S. consumer confidence last week. What came in? It came in red, came in not the greatest numbers, below forecast. We'll see what Europe is doing with the consumer confidence over there. Again, no real US red folders in that block. We move into Wall Street, and we've got speakers throughout the day, and again, not much going on tomorrow afternoon. So Wednesday, midweek, in Europe, we start off with UK British CPI red folder. You got your CPI year over year, your core CPI year over year. So we'll see what's going on there. Looks like a big increase. Previous in UK was 2.6 this time last year. They're forecasting for an increase to 3.3. That's a big increase. That's 0.7% increase in CPI year over year. We'll see what the actual number is here. Then we move into North America here. We move into Wall Street. Crude oil inventories, 10:30 a.m. If any of you guys are trading or swing trading crude oil, make sure you pay attention to 10:30 on Wednesday, because you got your crude oil inventories directly related to supply and demand. And we continue to move into Thursday. Wow. Okay, so Thursday is the big day this week. Thursday, May 22. We've got a lot coming out. This is all of our flash manufacturing and our flash services throughout the entire day. So it all starts in Europe, starts with French manufacturing and services. Then we move into London Market Open. Then we get some German flash manufacturing, German flash services. We get the Eurozone over here at 4 a.m. Then we get the UK manufacturing services at 4:30 a.m. red folders. We continue with the G7 meetings. You can see it's all week. That's day 3. We have a Spanish 10-year bond auction. We continue to move into now the North American block. We have our weekly unemployment claims that come out every single week. Last week was 229,000 individuals were unemployed, and they're forecasting this week a decrease of 2,000 to 227. And we start moving into Wall Street. So we don't have any really big so far red folders at 8:30 for the US. We start to move into Wall Street, and then you can see when US releases their 2 red folders regarding flash manufacturing, PMI, and flash services. Notice the time, 9:45 a.m. Eastern. So that's 15 minutes into Wall Street. Then you got 2 big impact red folders for the US. So that's when you have to trade with caution if you are going to trade Wall Street at this time. Okay. And then we continue throughout the day, natural gas storage. And that's for Thursday. Then we wrap it up. We finish off on a Friday. Starting in Europe, you got your UK pre-London 2 a.m. retail sales red folder. 2 more Canadian red folders at 8:30. Our core retail sales over here, retail sales month over month. And then we move into Friday, Wall Street. Got a few members speaking right at Wall Street Market Open. New home sales, and that will wrap up the week. So you can see this is a little lighter week. But you still got to trade with caution, okay? News-wise, that's what we got going on. So earnings. Now let's just continue into earnings all week. Again, let's just go through this. Let's highlight the big names that could impact the markets. So this is this morning, pre-market. Again, I'm just going through the list to see the big names that could possibly impact. Not much. Monday after hours, so today at the close. Again, are you familiar with any of these? Will these move the S&P 500? Will these move the Dow Jones or NASDAQ? Not necessarily, okay? So we continue to look for those big names. Here's a name that most of us should be familiar with. Tuesday morning, Home Depot, 6 a.m. Eastern. So I pay attention to these big box retail stores because this is where you and I, right now, like in May, June, we do a lot of gardening, we do a lot of home renovations, we set up our patio sets and cut the grass and all of these things. So at this time of the year, Home Depot should be having some good numbers, possibly some good guidance going into the spring, summer months. This is when a lot of renovations are happening, a lot of construction, a lot of do-it-yourself building. So I'd like to see how consumers are spending their money. If the Home Depot starts giving guidance in their forecast And like Walmart, that Walmart just did a couple last week. They were very the sentiment was very negative due to tariffs and things like that, and said the consumers are going to start to feel a little bit of that. So Home Depot, I'd like to see what they're doing here. They are a security in Dow Jones. So your retail stores, Home Depot, Costco, Target, Walmart, those are traditionally your names that you should pay attention to. So we'll see kicking off Tuesday morning, Home Depot. That's 6 a.m. That's one I'll be watching. We move into the after hours Tuesday. Again, do we see a big name that not much going on Tuesday afternoon? Let's move into Wednesday morning. Here's another big name, Target. So Target has taken a little bit of a hit lately due to tariffs and supply issues, maybe coming from China and things like that. So we do have to pay attention to this. This is Wednesday morning, 6:30 a.m. Eastern. Okay, and over here, Lowe's company. They're similar to a Home Depot style big box do-it-yourself store. And we move into Wednesday midweek. In the close, we got Snowflake Tech, Zoom Communications, more tech over here. That's Wednesday. And let's go into Thursday. So remember, Thursday was a busy day in the markets news-wise. Do we have any earnings? TD Bank. Okay, so I bank with TD Bank. I trade with Ameritrade. This is here in Canada and US. So financials, we got banks. So not much going on again on Thursday. Thursday after the close, just looking into this, no big names. So I go through where I see those big names. And then Friday, we only have 3 right now. Probably nothing in that Friday after hours, nothing. Okay. So that's earnings. So the big ones are Target, Home Depot this week. Right now, just in the news right now. Okay, so Sell America is back after U.S. loses its last top credit rating. So we had that. And did you guys notice when Moody's released that? It was Friday right at market close. It's like the timing is just perfect when they release these things. So that's why we did that blog last week on trading on a Friday. Are you going to go into hold on to the weekend? Because anything can happen. So did you see when Moody's released that right away Friday after hours? Almost every security was in the red, and you can see how it's maybe trickling over into pre-market today. So we'll see how everything is going to trade. And we did also a blog on Moody's downgrade. So if you want to learn a little bit more about what that is, check our blog section. I'll show you it too on this call. Over here, you got Besant sends reciprocal tariff threats to trade deal laggards. So what he said was, if those countries are not approaching the negotiation table, we're going to go ahead with tariffs and maybe even more. So it's kind of like a little threat here. Some countries haven't even came to the table yet. So we'll see what happens with that. This is what I was just talking about. U.S. stock futures sink after Moody's credit downgrade. If you want to read a little bit more, there's an article right here. NVIDIA's in the news. NVIDIA debuts humanoid robotics customer AI tools. That's pretty significant. So this is their CEO, Jensen over here. So we'll see what happens with this. Morgan Stanley over here, buy any dip in the U.S. stocks after Moody's cut. So that's what they're saying. Maybe good discounts. But again, just trade with proper risk management. Okay, so guys, some news over here. I know whether you like Biden or not, we're humans. He was diagnosed with aggressive prostate cancer, so I wish the best for him and his family. So that's with Biden over here. That came out in the news, I believe it was yesterday. Walmart slips as Trump takes aim at retailer over tariff price hikes. Okay, let's see what else is going on here. Okay, so here's home improvement sales put. So we'll see what I was just talking about. Home improvement sales, construction building, Lowe's under microscope. So all of these this week, you do have those coming out. And so that's in the news right now. Pre-market, right now we've got see the futures right here. So we're down over 1% in the S&P. Negative 0.8 on the Dow futures, and tech is taking a little bit of a hit today, negative 1.6 currently this morning. Okay, so that's news this week. And then now let's move into right over here, what I was just talking about, our website. If you come to our website, you click on more and you go to the blog. So this is what I was talking about last week, mastering Friday trading heading into the weekend. And then a few weekly outlooks for members. We also had a trade recap on US oil. And then this one right over here really quickly. This is the Moody's downgrades US credit rating from a AAA to a AA1. So what exactly is this? I'm just going to go over this real quickly, guys. Again, just if you guys can read our blogs on your own, it would be great, but I can summarize this really quickly. So if you don't know what the rating change is, from a AAA to a AA1, the highest rating you can have is a AAA. You know, like some of you guys go and you buy steak at the butcher or at the grocery store. But when you get your steak and it's a AAA, you know that that's prime time steak. Okay, there's AA steak, there's single A. You know, you get a little lower, but when you're buying steak, if you get a AAA, you know you're getting a good slab of meat right there. So AAA is the highest rating you can get over here. It signifies the lowest credit risk. It's considered the safest debt issuer. Moving to a AA1, the next tier down, indicates a slight increase in perceived risk, but still reflects a strong credit profile. Implication of the downgrade, although not a drastic step, it signals that Moody's perceives some increased risk related to the U.S. government's debt sustainability or financial stability. So you know that U.S. is in debt, $38 trillion of debt, and that's continuing to increase. It's not going down. So that's why this Moody's downgraded for the first time in over 100 years. So it is pretty significant, guys. How will the markets react? You'll have a bond market reaction. So you might see rising yields. We already see that right now. U.S. Treasury securities are considered the global benchmark for safety. A downgrade can lead investors to demand higher yields, interest rates to compensate for increased risk, causing a decline in bond prices. Spreads can widen. How will this affect the stock markets and the equities market? Volatility can increase. Investors may reevaluate risk across the board, leading to increased volatility. Potential declines, that's what we're seeing right now as a reaction to this over the weekend. Some equities, especially those sensitive to interest rates like financials, might experience declines as borrowing costs rise. Currency markets, so if you're trading currency right now in the Forex markets, a potential US dollar weakening, a downgrade might weaken global confidence in US debt, possibly leading to a depreciation of the US dollar against major currencies. So if you saw the US dollar has it declined a little bit due to this news. Impact on borrowing costs. Elevated borrowing costs. The U.S. government may face higher interest expenses when issuing new debt or refinancing existing debt. This can lead to increased budget deficits. And then there's global implications, fiscal policy, and political impact. So this will affect monetary policy, everything on our next FOMC meeting with Powell. Could affect the way whether there's going to be a pause, increase, or decrease in short-term interest rates. There's long-term consequences with this. And so just in summary, a Moody's downgrade from AAA to AA1 is nuanced, but signals increased risk perception. It can lead to higher borrowing costs for the U.S., influence global markets through bond yields and currencies, and promptly policy responses. So while the economy may not face immediate crisis, it underscores the importance of fiscal policy and investor confidence in the U.S. financial system. Okay, so that's just a little brief understanding of what this means. Okay, so now that you're caught up, thank you everyone for on YouTube. There is a free Telegram channel that's pinned at the top for you guys. It's right over here. And there's our YouTube link. Guys, we have promotions right now going on for SST 3-month and yearly plans are 50% off. So if you're interested, use this code at checkout. There's the blog about Moody's and the trade recap over here. And just continuing with everything, okay? So if you guys are ready, we can hit the charts. We'll get started with gold, okay? And then we'll move over to NASDAQ and US 30. Guys, there was a great setup over here just on NASDAQ right here. So see the big drop right over here. So here was notice the timing. So Sunday, 6 p.m. after Moody's released their article on Friday. This is over Saturday. And then Sunday when the markets opened up, look at NASDAQ. Had a big bearish candle. It opened right here at 21,417 and it dropped all the way down there, 21,215, and it closed right there. And all I did was, this was right before I was watching the Toronto Maple Leafs game, and shout outs to Florida for beating Toronto Maple Leafs. I know I'm Canadian and I should be cheering for Toronto, but I'm actually a lifetime Montreal Canadiens fan. I've had rivalry with Toronto Maple Leafs, so it is what it is, guys. So I did this while I was getting ready to watch game. Look how easy trading can be. When you see an abnormal size candle, which this is on 5 minutes, so that big drop. What did I do? I grabbed my Ronny tool from the opening to the closing. I figured out exactly where 0.5 was. There it was. 21,342. I did my zone a little bit above, a little bit below. I drew it across. I placed a signal right here at the 0.5. I had a signal while I was watching the game, right over here, and then it slowly started to build its way up. And look at timing. So this is now 7:45 at 8 p.m. It's the futures market opens up. So you can see there was a big bearish engulfing candle that closed below, and it came in the zone right at 0.5. Bearish engulfing candle answered, and right there, 10 minutes to 8 p.m., right before the futures market, you could look for a sell, place your stop loss above the zone, and look at how it all played out after that. Here's 8 p.m., here's the futures market, big push down. If you were looking at 50% of that candle, continuing to drive all the way down where it filled that wick and broke a little bit. That was over 100 pips, and slowly it started to come right back up, but you see how it's still lower highs, continuing to push down if you got runners or if you're still holding it. And look at what it comes back and retests. Look at where it comes right back and retests. This significant low wick, which was support there, and over time turned to resistance, and it kept falling, making new lows. And this is where we are right now. As I'm speaking, it is trying to come back up, okay? So that's how you can utilize your zones and continue trading with the trend. Wait patiently for the market to come to you. This right here was a counter buy. If you took that, that's fantastic too. But you got to understand you're coming right into that big value area, that big premium area in this situation where sellers are waiting to continue to sell that down. Okay, so if you got that, congratulations. If you know what I'm talking about there and you're learning something, also congratulations. Okay, so let's get started with gold because it is 7:23. In one more hour we're gonna have Comex market open. So this is gold on the 5 minutes, and we're gonna start off on the daily, move down to the hourly, 5 minutes. Last Friday we did some 1 minutes. It was fun, but this week we've got in SST, we've got two 1 minute sessions I've changed over here. So if you look over here, this week, guys, Tuesday, 11 a.m. and Thursday, 11 a.m. For you guys on Zoom, we're going to do our live 1 minute scalping education. So I got a lot of good feedback from it last week when we did it, and we'll continue with that, okay? So that will be Tuesday, Thursday this week. Okay, so welcome everyone. Thank you guys, everyone on Zoom for joining. Welcome. Good morning, Samuel, Conrad, Johan, welcome. Danny, yeah, happy the Leafs lost game 7. But we still got Edmonton. I'm still cheering. Now I can cheer for Edmonton. So we'll see what happens there. Big games. Also basketball, guys. New York Knicks. Wow, that was a big game 7 win over there. Welcome, Val. Thank you for joining. SSDN, thank you. Emmanuel, thank you for joining. And YouTube, also Travis, thank you guys for joining. Tony Gold, welcome. Meeks, welcome. Esther, thank you for joining. The Creex, sorry if I butchered the name, welcome. Trading War, welcome. Sammy, let's go. Okay, so we're getting on gold on the daily. Okay, so we're going to get off on the 5 minutes. We're going to do a top-down analysis, okay? If you guys are trading or you're in trades right now, please monitor those as well. And I'm going to be doing some charting on the daily. So For everyone that's been sleeping the last few months, if you now are just waking up, gold hit an all-time high of 3,500 exactly per ounce up there. So what I've been doing is I noticed that there's been some two bodies right there that push down from the all-time high rejection, and I've been dragging that box across into the future. So there you can see that double top. That was that manipulated day we talked about last few weeks right there. And then you can see how the buyers bought right back in the red box and they got rejected, and we've been pushing down since then. Okay, so let's continue with that red zone, stretch it into the future in case gold comes right back into this zone. There's another one right here that we've been talking about, this little bull flag on the daily right there that kept the market moving up, gold all the way to that all-time high. So that looks like it's a bullish bullish flag right here. So now that we've identified it, again guys, don't forget, stretch it into the future. If you don't do that, then you might miss potential moves in the future. You might miss potential pullbacks. And so it takes 2 seconds to just stretch it in the future. It doesn't take any effort to do that. Then you can see when the market came right back down into it. If you had a signal, if you had an alert, something here, you could have noticed what happened, and you could have maybe bought those 2 days coming out of there. Then again, stretching it into the future. The zone is intact. It's the only thing that moves is the volume. That's what's variable. So the volume moves up and down. If we get closures above, it could turn to support. If we get closures below, it could be resistance. Okay, so you can see here, there's that double top now. Here's the M pattern coming down. You can see it tried to break this zone. It struggled for 2 days. Then finally right here on Wednesday, it did close below, and in fact it did push a little lower right there. So you see that low point last week is exactly 50% of that bullish candle right there. So if you locate, like, see how I have the all-time high, and if I locate like the weekly low right there, I'll put the orange lines so you can see that's a significant orange line, all-time high. That is also a significant orange line, 3,120. That was last week's low, and we traded right into approximately 50% of that big bullish candle, and there was support there that brought it right back up. And look at where it closed. It closed back at the top of the green box. So you can see now we're barcoding on the daily. It was bearish, bullish. Bearish again. It came down on Friday last week and came right back up and closed below it. So you can see today it opened ignited. It could have opened and got rejected here because it was essentially a red box when we closed on Friday. But right now you can see how the buyers are bringing it right back up. So if we're looking at our daily candles, okay, is there a point of interest right here? This is where I start using my yellow lines on the daily. There's a daily point of interest on gold. You can see where we closed on Wednesday, where we opened on Thursday. Is the volume still above this yellow line? Yes, it is. There was a couple breaks, but we're still above it. And then on Friday after hours, Moody's released that downgrade. That's where US dollar, it's not the greatest for the US dollar. And look at how the gold opened. Did it open bullish? Yes, it did. Did it open bullish ignited? Yes, it did. Was there any drawdown where the sellers anywhere in sight to push this thing down? No. You can see how strong it is as an open. This is a daily point of interest as well, where we closed on Friday, where we opened. But also, this is the lowest point of the day. So it's a purple line. Very strong open today. 3,198.40 cents. So we're just below that 3,200, holding good support. And this was a red zone right here when this body closed below. Today we opened very strong, very strong. When it came into about maybe 50% right here, 3,220. Was there a reaction there? Did it push down? No. So it continues. So I'm just going to mark that about 50% in there. Around that 3220 area, and when it came in there, maybe it should have got rejected and came back down. Then we could have been continued to look for sells on gold, but it actually came right in there and continuing to push very bullish volume, and it also engulfed Friday's bearish volume. So okay, but now when we look at the highest point today, how high did we get to? We can see the high wick. There's a purple line right there for the highest point of the day. I can still see it's below Friday. It's still below Wednesday. It's still below Tuesday. And There's 50% of this big bearish ignited candle that started last week. So this was Monday, how it started last week. If I'm looking at 50% of that, it's probably right around there. And again, I'm guessing where 50% of that candle is. If I don't want to guess, grab your Fibonacci tool from the opening of Monday's body, bring it down to the close of Monday's body right there, and there's exactly 50%. So you can see I was off by just a little bit. The exact 50% is 3,282 right there. If you want to draw your bearish zone, remember, it's just a little bit above, a little bit below right there. You're utilizing your 382 and your 618 on the Fibonacci, and there's your zone with 50% being right in the middle. And if I make it red and I stretch that into the future, that's what I could see as our target, maybe where the buyers want to maybe bring it up here to 32.82, and then we'll have a reaction in here. Maybe the sellers will continue to push it down, or the buyers might come through here, close it above. We flip this zone, we invert it to green, and we might be continuing to push back up here, okay? But you can see right now on the daily, we are barcoding, where it was bearish, bullish, bearish, and we're coming up bullish. Notice on the bottom where it made that weekly low, it's got a higher low on Friday. We have a bullish ignited open today, so it is pushing up, but we don't have any new higher highs yet, okay? So we got to break for a new higher high in order to continue trending up, okay? So if we do pull back, if the sellers do continue to push it down, maybe we'll test the top of the green box at 3,236. If it continues to push down, maybe we'll look for support at this yellow line, 3,221. And again, the bottom of the green box. If that can't hold, then we're back to the low of the day, the most bullish point of the day. If it cannot hold and the candle flips bearish, then we're coming down to fill this wick. Maybe test this point of interest. If that can't hold, then we're coming down to test this wick right here. So you can just go down the grid with each one of these successive areas. Okay, so right now, very bullish on the daily. If I go into the hourly, okay, and then again, for the same what we did below, you can do the same for the top. If you break out of this red zone above us and the buyers are pushing it up, right there, you've got two bodies, a body and a body. That might be where the next point of interest is on the daily, right there, okay? So I can continue to do this, but we're just going to worry about what's going on in here for now, for the next few hours, okay? So it's very bullish. Let's now break it down to the 1 hour, okay? Was that a good, guys? Do you guys understand that daily analysis, weekly analysis? Does it maybe start thinking of how today is moving, maybe what trend? It's obviously bullish, so on the time frames, we should be looking for buys, but we could also look for pullback buys in areas of support. Okay, so this is how it looks on the hourly. So you know when I marked like last week's lowest point, now I can see exactly what time it was. It was Thursday at 2 a.m. That's pre-London. That's when the market reversed, like it came in there and started to push back up. Okay, this if I was trading on the hourly, this would be an hourly point of reference. I would be looking at maybe all that consolidation and see there we did close above it and continuing to push, very bullish. That's where we made the highest point up there Thursday at 8 p.m. futures market. Look at the pullback. It came all the way down, but you see how it held? 50% of that big hourly candle continuing to hold structure, two good wicks right there, and it continued to push right back up. There's the big bullish move Sunday at 6 p.m. when the markets opened up, when you saw NASDAQ fell, US 30 fell, the US dollar fell, gold very bullish, and it's not breaking this highest point. And then again, another pullback, okay? It didn't hold 50% of that volume. It came back down into the bottom of the green zone and continued to push, retest it, and push up. So this is where now the hourly is consolidating right now. It's consolidating where it came up and back down. It came up, it might go back down. If it comes back down, we could look to buy, like this yellow line right here, just like exactly how this looks. So those are points of interest. Right now, it's consolidating right near at the nearest highest point of the day, right here. So if you look at the consolidation, there's your purple high of the day, and at the top of the green box, if I make this neutral to show you that there's some sort of consolidation here, we are flagging. It did come down bearish, but it went back up at 5 a.m. It came back down 6 a.m. and went right back in here. Now it's coming up 7 a.m. So we're going to see, can we maybe break through here? If it does, where could we go? We could easily take out that high right there, but this is more of structure. For us scalping, this is what maybe we gotta look for right up here. Maybe 32.56, 32.55. So this is where I draw a white line. Maybe I'll go to the like right 55. We'll keep it right there. So I draw a white line to show me that if we break this purple line, the highest point of the day, that in the past when we broke it, how high did we go to? So there it went up, then they pushed it back down. Again, we came through here, and then they started to push it back down. So from the purple line to that white line, like if I'm scalping from 32.50 to 55, it's exactly $5. That's a 50 pip move, filling that imbalance right there. If it continues to push out of there, then where could it go? Right there. There's your next hourly point of reference. You can see when it did push out of there, like their highest points, but there's the body of volume right there, 32.62. So I could draw a white line above us right there. And then if it continues, then we're coming right up to the bottom of that red supply zone right up there, okay? So it is building really nice. A double bottom would have been down here. You can see how it's kind of like a higher low. So this is what we got going on right now. It looks like a really good double bottom, higher low double bottom. There it came down. There was the original bottom, okay? This is our neckline up here. And then as it was coming down, like right there, that would have been like a double bottom, but you can see it's a higher low. So they supported the depth of market. They didn't let it come down. They brought it right back up right there. It should have broke right there and pushed up. It didn't. So then they pushed it back down, but you see it's a higher low. So they are building it, and it is coming back up. But again, we're trying to break this highest point of the day, and now we're in a bullish flag on the hourly. So definitely it could come and start to break. Maybe if we get an hourly candle break, maybe this might be our retest area of support. We continue to hold it, then we could be driving into the red zone up here. If they fail, okay, if the sellers come in and push this down, then we could be looking to sell from here down to that yellow line. But remember, if you're selling, you're counter trading. So that's why I like to measure if I'm taking a sell, like from here down to there, I can see it's about 150 pips, but that's where daily buyers could be waiting at that yellow line. So that's, then again, if you're counter trading, you might sell down there, but then close the position, and then you got to respect that the buyers could be here bringing the rate back up. Okay, if you start getting volume closing below here, yes, then it could turn bearish, but you got to go bar by bar and watch how things are moving. Okay, so hourly looks strong as well. We got two nice pullbacks that were brought up, and we're driving right now. So on the 5 minutes, now if we go to the 5 minutes, this is what we got going on. So the 5 minutes, you can see are trending up. If you were to draw like just a trend line from here, you can see it's going up. If you continue, you can see it is still pushing up. Like I know it's not a perfect trend line, guys, but you know, you just want to get in general right there where it started. It pulled down and went back up, continuing, pulled all the way back down to that trend line to the bottom of the green box, continuing to push, and maybe if it comes back down, sells down, right there is where we could be looking to maybe buy the market. If it breaks the trend line right there, that's what I was saying, that sell that could come down to that yellow line. That's 150 pips, but then you got to recognize that you're in right in 50% of that demand zone, and that's where those buyers could come back up. Okay, so right now on the 5 minutes, this is what we got going on up here. 5 minutes makes structure as well. You can see right here, we've got 5 minute kind of resistance. So I use that red line right here. We are breaking above it right now, but we had an impulse right there at 5 a.m. and then it failed and came back down. We came back up right there. There was a resistance point where they kept pushing the market down, but when it came down here, it wasn't breaking below here. Look at all of these wicks right here on the 5 minutes, right here. You got 1 wick, 2 wick, 3 wicks, almost 4 wicks that held the market up and continued to close above. And look at the retest coming down. Could have bought in. You could have bought anywhere in here. Place your stop loss below this red line, and you're riding all of this back up. Okay, so it came right back up and it tested that red line. They pushed it back down. Came back up, came back down, all higher lows, and continued to break around here. So it did close above that red line now. Now you can utilize this red line for quick support. If it pulls back, see if it holds, see if it can fill this wick, and maybe we can target the high of the day right back up there, and we'll see what's going on, okay? So with gold, now what I can do is, if you want to add some indicators to help you out, the 9 EMA is a good EMA to use for like short-term scalping, to show you maybe the short-term trend. Again, the 9 EMA kind of calculates the last 9 bars and shows you what it's doing. So the volume is above the 9 EMA, so it's short-term bullish right now. And then if we add more of the higher time frame one, I prefer to use the 200 EMA. This one is like the last 200 bars, and you can see we're diverging away from this big 200 EMA, and the 200 EMA is in the demand zone. So if it ever pulls back down in here, that's where the buyers are waiting, down in there. So if you're selling into there, you have to be careful. Okay, that's why I said you got to watch when you're counter selling a strong trend. So EMAs are bullish. Market is bullish on the daily, it's bullish on the hourly, it's still bullish on the 5 minutes. That's our highest point of the day. So you see the purple line, and the 5 minutes have tested this thing. They've tested it when the futures market opened, and they've been unsuccessful right there. You can see how many times they got rejected. See, they came in here, they got rejected. Came in there again, got rejected. Came in there, got rejected. Came in one more time, they got rejected. They closed below. Look at the retest. Came in there and retested it back down. Came in there, retested it back down. Came in there, retested it back down. And then that was enough to have that big drop. So if I stretch this all the way into the future, you can see we almost came up there, right here. And so we might be coming in here as well. So we got to really watch that area up there, okay? Because that's a big, big area. That could be considered like the bigger second top. There's the big top. If it comes back in there, that could be the second top. So if you look at it with this perspective, it came up all the way up there. It got rejected, came all the way down. There's the big, big neckline right there at the bottom of the green box, at the trend line, right around that 200 EMA. The buyers step back in. So if you consider like how it's coming up, that could be, if it comes in there, that could be like the second top that could take it down. But you also got to watch what could happen above here, okay? What if it kind of impulsively breaks out? Why? There's liquidity up there. Remember that. There's a lot of maybe sellers who are selling this, trying to sell. Their stop losses are above there. There could be pending buyers waiting to get activated up there, but there could be a lot of pending orders waiting above that zone, and that's representing liquidity up there, okay? So will they come up there and grab this liquidity and maybe grab it, fake out the market, and come back down, close below there, and we could look for sells? Or it could continue to be bullish. They come up there, they hit that liquidity, they come down to retest, but we close above. This box, red box would be green, maybe it retests, and then we're driving right back up to next higher highs, okay? So that is what we got to watch right now for the next maybe 45 minutes going into Comex to see what they do up there, okay? So that is gold on the 5 minutes. We'll leave gold right over here on the left side of our chart. Would you guys like me to do one index and then we'll do our other one after 9? Or do you guys just want to stay with gold right now? We got plenty of time, guys. I can do one of these right now. I can do NASDAQ for now. Then we can watch gold and NASDAQ. And then we can do Dow more so into 9 a.m. I'll do NASDAQ a little bit quicker to give us 2 charts to look at. Let's do this right now. So we got gold. And we'll do NASDAQ because I know some of you guys are trading NASDAQ right now too. And I'll do this quicker, okay? So that's what I showed you, that big drop. Like, you guys, you see how easy it can be? Just like that, there was that big drop. You know, if you just grabbed your Fibonacci tool, like how I showed you, There's the 0.5. If you wanted to draw your zone, like how I did, and you can do this all while you're watching the hockey game. And what I did was I set an alert right at that 0.5. And as it came right in there, it came in perfectly. I saw that big bearish candle close below. It retraced 50%. That was either this candle, that candle, or this candle would have been a good continuation to continue to sell the market, to fill that wick and break. So that was how I showed it at the beginning of the call. And when you see abnormally large candles like that, right away you should be looking maybe where that pocket is, where that zone is, in case there's a pullback coming back into there. Okay, so let's start off NASDAQ on the daily really quickly. Okay, so we have our all-time high supply, double top all-time high supply on NASDAQ right up here. Okay, we're not too far away from it. This is around 22,250. You can see over here on the daily, we also have a good supporting area we had in the market right there. Okay, so sometimes when candles are already produced, already printed, then you can see the overall context, how it was holding as support. Finally, it broke right there, volume closed below. So at that point, you can make it a red zone and stretch it again into the future, Now I've got that big bullish candle closing above, and I see it's already retested it. So I can make it green and stretch it into the future. We might be coming down into this maybe today or sometime this week. Okay, so again, is there another good point of interest right here? Yes, there was a nice supporting zone when it came in. It stopped, it pivoted, continuing with this zone across right there where that big bearish candle closed below. That's when it was red. Trump's Liberation Day right there, April 9, the market came right back up, but came back into a supply zone and got rejected. And then the next point right there was another pivot right there in the market. Okay, so you can see how you can just follow these individual candlesticks and you can see where they made support, where they didn't. Remember what I was talking about on the 5 minutes on gold, on that higher low support? So this is how you can see that how it was created on the daily. There it came down. That was the first bottom. Came back up, neckline. As it was coming back down, did it come back down to get that double bottom? No. They made a higher low. They're supporting the move. So that kind of gives you a clue that they're pushing it up. All you need is that closure, which we had, and there was your pullback retest candle right there where the market is continuing to drive. Okay, so what we got to do now is ask ourselves, did the volume close above this red zone? Yes, it did. What color should it be? It should technically be green. And we continue with this zone into the future. Okay, and you can kind of now update it with the lowest point so you get it in there. So if we ever do come down there, we could be looking for buys at any one of these green zones. And there's also points of interest too, like within here. There I would place a yellow line at that big bullish bar right here that started this big move when? Last Monday. Monday, Tuesday, Wednesday, Thursday, and then Friday. And then look at today. They downgraded it on Friday on Moody's. And look at how the NASDAQ is a bearish engulfing candle coming right back down. Okay, so what we got to do now is easily we can figure out where our resistance is on the daily. Right there, point of interest right there. Okay, now I can see last week how the volume, how far it filled up to. It filled up to right over here. You got a body, a body, a body, a body, a body, and wicks retesting this area over here. I love the number 21,420. Beautiful, beautiful, beautiful. And look at now. Now we ask ourselves, how did today open? I don't see a wick on it. So it opened bearish ignited. Remember, gold was bullish ignited. So that's the highest point. So it is a point of interest yellow, but it's actually today's highest point. So that's where I place a purple line. And it's bearish, 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 where it made a low of the day. So we can see the lowest point wick. There's our low of the day today. And it's been coming up since it hit that low of the day, but we still have this big bearish body. Can we identify 50% of that body? I'm guessing 50% of this black volume right there, that's 50%. Okay, I'm guessing right there. Again, we don't need to guess. Let's be 100% accurate. Grab your tool from the opening price to where we are right now. Remember, this is not 100% official because this candle is still moving. But there's the 0.5 of the current volume right there, okay? So what I could also do is I could draw a red zone to see if the buyers are going to pull back into here. Are the sellers going to continue to hold this pressure to push the market down, or are the buyers going to flip this today? Okay, so you can see right there, that's kind of that bearish pocket right there. If we do come back up, that's where maybe it could go back down, or that's where the market could flip and go back up bullish. Okay, so that's what we got to watch for. Is NASDAQ bearish? It's moving up, but if we look overall, the double top all-time high broke all lows. Now it's coming all the way back up, but this is still a lower high from over here. So they could definitely start pushing it down. So this is going to be an interesting start of the week to see if it can consolidate in here, if buyers continue to push it up, or sellers are going to come all the way for the low of the day and start to transact in this green box. And if they get in that green box, you can mark, okay, what I would do is this. See right there, if I place a yellow line right there at that retest wick, and then you can see if you got those two wicks right there, you can see you're generally right in 50% of that green zone. So if you want to kind of maybe just manipulate it yourself, a little bit below that wick, a little bit above those wicks, then you get 50%. If you want to test this theory and be exact, grab again your Fibonacci tool from the top of the green box to the bottom right there, and then we can get exactly where's 50% right there, 20,710. And that's where maybe if it comes in there, good support buyers will be waiting right there to maybe buy that move back up. So they take out that low, and then there's the big support. Okay, if it can't hold there, come down to the bottom of the green box. Again, if that doesn't, or green box, if it can't hold, it goes down bearish, 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 bearish. Where would it come down to? Right there. There's your point of interest, where it came up, 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 and then stopped right there. And then they pushed it right back down. So if you break there and it comes down bearish, 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 again, that's where the buyers should be. If they're not there, it might be down into here where there's a wick, a wick, a wick, anywhere in here. But we don't even need to talk about this right now because we're all the way up here. Okay, so you see how we're coming down now. Let's go to the hourly, see how this thing, where was the big drop off? What time did it start? Okay, so you can see how much the hourly candles are trying to break this high point. They did break it there, but it was a liquidity grab and continued to push down. Then it came into this zone of support where it was green, continue to come back up. Again, they tested it right here and failed. Came back down into the green zone and closed above and continued for the next 5 hours right here. This was Friday, 11 a.m., noon, 1 p.m., 2 p.m., 3 p.m. power hour, and then market closed Friday. And then what did they announce? Right when market closed in the after hours. That's why we did that blog. If you hold positions over the weekend, you got to be ready for any news that's released in the after hours or over the weekend. This is exactly when Moody's released the downgrade. And you can see how it opened right there and just continued to drop down. Coming back in, are we below 50% of that candle on the hourly? Like right there, we can do the same stuff. Is that 50% of it? I use my white line for hourly, okay? I'm guessing, and I'm pretty accurate that that's 50%. But again, so you're not guessing, from the opening to the closing of that hour, look at how close I was, okay? Pretty accurate by just guessing, but we don't need to guess. There's now we are 100% perfect. That's 50%. As it came up, look at, did it tap into 50%? No, lower high, and they pushed it right back down. Then it continued. Pushing down, lower lows, pullbacks into that, continuing to push down, pullbacks into 50% of that bearish candle, continue to push down. Now we're actually closing, maybe engulfing this. So you can see now we're coming up on the hourly. Did we just break a point of interest right there? Look at right there, guys. So you see when we came down on the hourly, it stopped right there, right? So there was the first supporting level that brought it right back up. So you see right there where it came down to the white line, it stopped, it came back up. They failed the buyers, and look at the sellers, they closed it below. So this white line is now resistance. It impulsively broke, volume closed below, continued to push down to the low of the day. Now the last 3 hours, NASDAQ has been trying to come back up, but look at where it is. It's right back at that white line. Can it close above? Or are they going to push it back down? So if they push it back down, 21,093 right here. we should find some hourly support right here. A body. It's already been retested with this hour's wick and holding. So if we come back down, that could be where they're protecting the market from breaking down to go to that lowest point of the day right there. And this is where, if we do break above here, we could break into that wick, but more so we want to see if it can get up to 21,175 and retest those bodies right there, okay? If you want to draw like some hourly structure, you can see it's already made one hourly bottom at the lowest point of the day right there, okay? So if you want to draw like an hourly green zone to show you that there is hourly support right here in the market, that's the first bottom, okay? That's what you got to do, because right now it came down. It's coming back up. This might be the neckline right here, or a little bit above here could be the neckline, or maybe right here, depending. But we got to figure out where the neckline is. Maybe the neckline, let's say, just say is right here. Then if they do push it back down, we want to see maybe how it reacts with this white line. Might be a higher low. If it's not, maybe a double bottom right here. And we traditionally know that the second bottom has more volume and might come back in with more power. It might be now like Wall Street and coming back up and maybe push, close, and then we got enough to come back up to the red box. But they could just continue to drop the market down. For example, if it's already been pushing down, this could be like just like a counter pullback, come find where the neckline is. But as it's coming down, it might not be a double bottom. What if that's heavy selling pressure that actually breaks? Then we flip the double bottom green zone red, because buyers could be coming up and maybe they get rejected. Maybe it's like a bear flag down here, and then the market starts dropping. Then we got to sell with the market, okay? But that's a good point of interest to get started for NASDAQ on the daily. We can see the lowest point of the day. It's already holding. It's been retested, but now we got to figure out these points. So, but it is still very bullish, okay? So if you look across here, now that zone, see right there, okay? So we came up. It's been retested. Are we going to come right back up, or are they going to push this thing down? But that's kind of the hourly structure for NASDAQ. If we go to the 5 minutes really quickly, we can see what's going on here. And we'll have all of this done prior to 8 a.m. So perfect. So there was that big drop we saw right when the market opened 6 p.m. It retraced exactly about 50%. They continued to drop it down for new lows. Retesting this, unsuccessful. Sellers still pushed it right back down. Buyers were strong where they came right up to there. So when we're watching 5 minutes, we know that there's a big 5-minute resistance right there. Continue push down and see new lows. Now we're holding on the 5 minutes. So it held in there, barcoded, it came back up, it pushed down. There's that higher low, tapping in the green box, go up for a new higher high, pull back, holding this higher low at the hourly, and now we're continuing to push up and see if we can close above there. So if you look at on the 5 minutes, it's slowly starting a little bit of a trend coming up, but there's a lot of resistance behind us, okay? So that's NASDAQ. We can do the same thing, adding the EMAs like we did with gold. 9 EMA, we're above it right now. And where's our 200 EMA? 200 EMA is right here. See how it's coming to maybe that hourly resistance? So if we come up there and you're in buys on NASDAQ, you got to understand, yeah, you might fill that wick right there and get that nice bullish move coming up, but then you're at hourly resistance and you're at the 200 EMA right around 21,180. So if you're in buys, what I would do is measure from here to there, just to know you might go up 40 pips, additional 40 pips here, but then you got to also know that you got some big resistance up there, okay? It could definitely break and close above there and start using this white line as support, that 200 EMA as support, and continue to drive up to there and there, but got to take it candle by candle. What I like to do here too is I see that 5-minute impulse right there where the market did break out at 350, came up, and since then they rejected it. Are we going to fill that zone right there? Okay, so even if you're looking for just a small scalp above this white line, driving up to that red line, again, just measure it so you know what you're looking for. That's about a 18 to 20 pip scalp just to fill that range. If it has a little bit of an impulse, could be 20. Okay, so that's for NASDAQ. What we'll do here is we'll place these two side by side, and we'll watch these till about maybe 9 a.m. And then at 9, we'll add our US 30. So we'll have 3 charts going into Wall Street. Okay. Okay, we got a Scalper Pro now sell right here at 243 area. So we see we tapped right into that red box and they pushed it down. So this is kind of that consolidated area right here. Maybe we watch to see how it kind of consolidates in this range right in here. We'll see what develops here. Okay. Okay, guys, on YouTube, if you can leave us a like, guys, we do appreciate it. Helps grow the channel, helps get finding more traders that want some free education, learning about price action. We do appreciate it, guys. Thank you. Okay, and also what I failed to do on NASDAQ was this nice big bullish candle right here, about 50% of it right there. If we do pull back, maybe we could buy a pullback on NASDAQ in here. We'll see if this holds, but let's see if it can kind of maybe break this resistance up here. Dougal, you can set a 50% line to appear every time you draw a box now. Yeah, good. Then you'll be catching a lot of pullbacks, and you're going to change the way how you trade because you're buying or selling where the majority of the point of control is. So just because you're drawing that doesn't mean it's like, I don't know if you're trying to say if it's a negative or a positive, but I'm telling you, it will change the way how you trade for the better. It will allow you to see exactly where the buyers are, where the sellers are. Maybe might teach you to be patient and wait for a trade to come to you. But I don't know. It helped me and it's changed the way how I trade, and it's filled my pockets up with pips trading that way. Just like I showed you on that NASDAQ sell last night, how you can just set an alert, sit on the couch behind you and watch the hockey game, and you got your trade station right here. When they alert it, you can watch it on the 5 minutes. I saw the bearish engulfing candle. I went in with a sell, placed my stop loss above the box, and collected 100 pips, sitting on that couch right behind me watching the hockey game last night. So trading can be that easy if you're patient, disciplined, and you know what you're looking for. But a lot of traders are not patient, and they're not willing to wait for that. They'll buy the bottom of that move, and it was about a 50 pip recovery, but you're counter trading. So you got to have counter trading rules as well. So you got to know every aspect of trading. That's you got to learn everything. Once you learn how the market moves and you understand what type of trader you are and what you're looking for, trading will completely change. Okay. So now it's 8 a.m., okay, a new hourly candle. We're seeing an hourly push right now on NASDAQ. Is it going to be an impulse, or is it actually going to physically close with some volume above here? 60 more seconds to go into the close. Gold is still just inside this range right here. Maybe we'll see if it will break down. Maybe we'll see if it will come back up. So you see this liquidity at the highest point of the day is still there. They never broke that purple line up there. 32.50 right there. Nice psychological number. Look at the highest point of the day. It's exactly 32.49 and 90 cents. Okay, they're giving us a 10-cent discount from the 32.50. They're being very generous today. No, this is in fact the real Ron. Will the real Ron stand up? This is me. I know I'm not wearing a hat and you guys are seeing my hair. That's why maybe you guys don't recognize me. Well, Ron's got some hair. Let me tell you a story, okay? Just so we're all on the same page here. Ron had great hair. When I was young, oh man, I had fantastic hair. I could have been a hair model, but starting to trade at a very young age created a lot of stress, a lot of losing of money, and all of a sudden my hair started receding. You know, like when I got into my 30s, a lot of stress, learning how to trade, and um, and then I started wearing a hat. You know, because I was kind of, I don't know what, like what is the word? I wasn't, I didn't like that, right? So I didn't like receding. You know, I was in my 30s. So as I built up a little bit pips and I made some money. When I went to Europe last year, my last 10 days of the trip, I took some donor hair from the back of my hair. I have a really nice, healthy at the back of the hair, and I kind of implanted them. I did a transplant in the front, and that's why Ron's rocking this new look. So I would recommend it for anybody, males. If you're receding or you're bald or you got some good donor hair in the back, it changes your confidence. It changes everything, guys. Two of the best investments I ever did in my life was LASIK eye surgery and and the hair transplant. But it was well worth it. Well worth it. My dad is completely bald. So it's all genetic. Like my grandfather was bald. My uncles are all bald. Um, I was starting to lose it, and I didn't want to be again just going with that bald family genetics. So I kind of changed it. Armando, the Albanian genes, yeah. I think I'm Albanian, so a lot of Albanian men were bald. Wow, Mark, your dad passed with all his hair. Holy. Efren, you're thinking about the laser surgery for your eyes? I would recommend it 100%. I used to wear contacts every day. I didn't like wearing glasses. They were bothering me, the contacts. I just said, what the hell, I'm going to do the LASIK eye surgery. And now my eyes are 20/20. I can pinpoint the candlesticks. I can look right at 50% now of them, and it's well worth it, guys. Like if you're doing some investments in yourself, um, I recommend it. The hair is more cosmetic, but I didn't want to. I wanted to have good hairline. It was actually very cheap, Tuzma. I got my hair all done for 3,000 euros. 3,000 euros. Here, if I did it in Toronto, $20,000. 20,000 Canadian dollars. I got it done in Europe for 3,000. So my eyes were. I kind of did it when LASIK eye surgery first started, maybe about 15 years ago. Well, not when it first started, but at that time I paid 6,000. It's probably cheaper now, but pips for hair transplants. That's what we should be doing. Um, okay, so we're 12 minutes away from Comex market. Gold is continuing to push down. Let's see if it can close below here. NASDAQ, okay, so it came up to that hourly white line. There was that impulse. So you see what I mean? See how it was breaking at 8 a.m.? It was coming up there. And then when that candle closed, look at where it closed, below, and then retesting. Now we got a bearish bar coming right now to test approximately 50% of this big bullish candle, okay? So we're still just kind of consolidating on both these securities. Right now we got a push down on gold, shooting star, pushing down, okay? Oh, really, Samuel? You did your eyes in 2008. Your eyes are very tired and need an update. Wow. I didn't know. My eyes are pretty good. But yeah, they do. You can go in for updates and they can fix it. Okay, so it did close below this zone. Now it's coming back up. So we're 10 minutes away. So I always just remind you, with gold, if you're going to take a trade right now, 5-10 minutes prior to Comex, just be prepared for a little bit of volatility, okay? If not, we wait for Comex and see how things move, okay? We're still stuck in this range. I know if you're scalping, there's a few pips to be made on scalping, but we're still in this range. What we're going to look for is maybe the bigger move. Are they going to make another attempt to hit that high of the day, or is gold going to lose all its momentum and start to break down, okay? So we'll continue to watch this. Again, we got NASDAQ over here. Efren, you got a good feeling that Miss Jones is going to give us a nice move today around Wall Street open. What do you think? Are you Efren, bullish or bearish on the Wall Street move? And right now, just looking at the pre-market, like everything is pretty much red in the pre-market. So I like to trade MicroStrategy. They're down 2%. Target is down 1.5%. Alibaba is down 2%. AMD is down 1.7% pre-market. Micron is down 2.6%. Nvidia is down almost 3% pre-market. What else we got? Meta, Facebook down 2%. Microsoft down 1%. Google down 1.7%. Amazon down 2%. Tesla down 4%. Apple down 1.6%. SoFi down almost 4%. Palantir 4.5% down. Wow, Manulife taking a big hit, 4.6%. Manulife is a great dividend security for those individuals looking for steady passive income through dividends. Manulife, they are down 4.6. Holy shit, they're dropping off the cliff. I might look to add more on Manulife. Wow, what's going on here? Okay, but Manulife is down. What else we got? SMCI is down. Okay, so that's Super Micro down 4%. BlackRock is down 1%. JP Morgan 0.5%. So basically everything is in the red pre-market due to the Moody's downgrade. So we'll see how Wall Street, how it opens up. We never know. Maybe it might flip bullish today, or might be a fake to the upside, and then they continue dropping it down today. But it's going to be an interesting day. So again, it's just the start of the week, so you don't got to go all in on a Monday. Again, tread carefully. Position yourself with good risk management. Don't go crazy on a Monday, because you don't want to take a big loss today and then you can't trade. Like maybe Tuesday, Wednesday, Thursday this week is going to be great trading. So I always trade careful Monday and Fridays. I don't know why I do that, but I think over time I used to struggle with Mondays, and then it would affect my entire week of trading. And same thing with Fridays. I used to struggle with Fridays because it was just right before the weekend, and then I would be kind of scared to trade right now, like starting the new week, because I lost so much on a Friday. And so I'm very careful Monday, Fridays, guys, the way how I trade. And then I really kind of go in the markets Tuesday, Wednesday, Thursday. But everyone is different. It's up to you. Some of you guys have had conversations with me and said, Ron, Monday and Fridays are my favorite and best days trading, and I struggle Tuesday, Wednesday, and Thursday. So everyone is different, but that's trading. Just understand, there was big news that came out Friday evening on the Moody's report. We'll see how Wall Street takes this and opens up the market. Right now, pre-market, if we're looking, pretty much every single security is in the red. In all sectors, it doesn't, normally sometimes it's just tech is in the red and financials are up, but everything is red right now, everything across the board. Okay, so gold coming right back up. It dropped, it came up with a bullish engulfing candle, and we're right back in that zone, and we're about 5 minutes away from Comex. Again, you got NASDAQ came down, back up, came down, so it's kind of just consolidating right in here as well. So we're going to see maybe will NASDAQ continue to push above here, but we got to see maybe a closing above this white hourly resistance line, or is it going to continue maybe to push down? Okay, and then maybe we'll trade down into here. Chino, what do I think of ICT? I honestly, I don't even know what it is, to tell you the truth. It's just like what we're looking at, but they got different names for things. I never really studied it. I don't know what it is, so it's hard for me to give my opinion on it. I don't know. You guys know more about ICT than me. I'm not knocking it. I just don't know too much to talk about it. It's not my trading style. I could probably learn what it is, but I don't see why I need to learn it when what I do is pretty consistent, pretty profitable. What I do. It could just be different names for this stuff. I'm trying to give you my honest opinion, guys. Like I seriously do not know what it is. I don't. Maybe if I take the time to study it, I'll figure it out, but no clue. I saw one video of a guy kind of structuring it, break of structures, change of characters, imbalance areas, like it's just right here. We have a white line. If you take out that low, like a liquidity grab, whatever it is, but they got different names for it and things like that. But it all depends on you guys. Whatever you want to study, whatever. But make sure when you're studying it, it's not confusing, because I find a lot of things when I was learning back in the day, I found things were so complicated and so confusing, and I didn't do well on them because I'm a slow learner. So I didn't understand it, so I was getting frustrated learning new concepts like that. Believe me, guys, I went to the Toronto Trading School and all of that. So I saw how complicated it is. I'm like, why can't anyone just simplify this shit? Why can't we just make it real simple for everyone to just learn this and just back test it and go with it? But whatever it is, if you're doing successful on ICT, amazing. If you're struggling, I don't know what to say. Okay, but what we got to do right now, ICT or not, is we got to watch Comex market open in the next 90 seconds. I always say this. This is what I'll stand by. No matter what style trader you are, if you're a scalper, intraday trader, swing trader, position trader, investor, whatever style of trading you're doing, some of you guys do smart money concept trading, ICT, some of you guys do red box, green box style, some of you guys use your Fibonacci tool, some of you guys, whatever it is, if you're consistent and you're comfortable with it, then continue using that. But if you're struggling with, you could be struggling with the way how I trade, this red box, green box stuff. But I understand not every style is going to work for everybody, but just takes a little bit of practice. But when you're trading, you got to be confident with what you're doing. Okay, if you don't feel confident with what you're doing, you got to step back and continue with your learning and figure out what works best for you. Like the style how I trade works well for me. I've been doing good at this for multiple years, so why change it, you know? I just adapt with the markets. I follow what the market is doing. I follow the volume of the markets, the volatility of the markets. That's what I do. Okay, so here we go. Here's Comex market open. Again, Don't make any silly mistakes, guys. Make sure you check your contract sizing. Make sure you check your lot sizing. Make sure you check your spreads. All of these things, it should be part of your checklist right now. So we don't do any silly mistakes, because I know how costly those mistakes can be. Like if you're trying to trade with a 0.1 and accidentally you have a 1.0, that's a big difference. So it could be detrimental to your account. So just careful with what you're doing right now. Okay, so we're kind of barcoding on gold. Bearish, bullish, bearish, bullish. Do you guys want me to stay on 5 minutes or 1 minute? Do you guys remember last week we did 1 minute? Do you want me to stick with the 5s, the 1s? It's completely up to you. Okay, so NASDAQ closed below this. So let's see if we get maybe a retest of this. Guys, if I tell you how I used to trade 20 years ago, you'd be like, what the hell is this guy doing? I used to write down on a piece of paper, like opening prices of daily candles and highs and lows and draw them out. That was kind of a strategy back in the day, before technology came into the world. But yeah, so it was just paper and a pencil. That's how kind of old school trading was done. So all of these new concepts are all foreign to me. I have no idea what these new things are, but with technology, hopefully they've improved the game for everybody. I just say make sure you understand what you're doing, okay? If you're struggling learning a new concept, it's probably not a good concept. You shouldn't be struggling learning. Learning should be natural. Okay, like right here, you can see a double top on the 5 minutes on NASDAQ. I can see that impulse break above here. If I bought on impulse, I would have been screwed because I'm in drawdown now. But you see, if you wait for bodies to close, or if you're taking impulse with smaller feeler trades, we talked about this on our lifetime call on Saturday morning. If you do have the urge to take a trade prior to closing, use something small. Okay, so gold retested and continuing to push down. Let's see what type of reaction we get if it can test this trend line. Maybe right here at the top of the green box, we could look to maybe possibly buy gold back up, or it might continue to push down. But this is the first 3 minutes of Comex market open. It's open bearish. Okay, so retested and pushing down. But guys, I'm not here to sell you guys concepts or whatever. I'm here to just analyze price action with you guys. I like scalping the markets. That's what I enjoy. If you guys want to learn that stuff, I'm more than happy to teach you scalping. But all the other concepts, if you are interested in ICT, go to the ICT website or whatever and learn it from them. I have no idea what it is. BTC, yeah, there was a nice run last night. What did it hit last night? 107? The high, yeah, 107,000 last night. We were almost about just under 3,000 away from the all-time high, and then they dropped it down. So we're trading at just below 103 right now. But still, it's consolidating above 100 is good. We'll take out that all-time high soon. Give it a couple weeks, and it will be driving right through that all-time high. Price discovery, easy 120,000 for Bitcoin. I could possibly see if it pushes 150,000 US. That would be something nice to see. Okay, so here we go. This is the close now of the first 5 minutes. Okay, so It retested, came all the way down, coming back up. Let's see. And NASDAQ is still pushing down. Okay, so you got a bullish bar that just opened. Okay, so again, it just came in lower high, could definitely push this thing down. But look at the size of the wick. Okay, so it's not a small wick. So if the sellers are pushing down, they got to come all the way down this exhausted wick and try and break for a new low. So it is technically still holding right here. I'd like to see if the buyers could bring it right back up into here. But sellers could definitely continue to push this thing down. And for NASDAQ, if you're watching NASDAQ right here, there was these are your zones of interest. These hourly, okay? So you can see that that white line is hourly resistance, and you can see how the 5 minutes candles are failing. Right here is hourly support. You can see that first bounce. So if you make this like a green zone right here, then you can see how we're trading inside still in here. NASDAQ is not going to continue to trade in here all day, but it could break and come down to the bigger green zone where bigger buyers are, or it could just continue to hold this and come right back up. So, and gold, good move on gold right now. Okay, so coming right back up. Let's see what type of reaction it comes back into this, if it gets into that consolidated zone. So maybe Comex opened, they dropped gold down, and it could be coming back up, closing in here, and we could be taking that next leg up. So I'm just waiting for this candle to close. Why? Because it's just the first 10 minutes of Comex, and we're moving into 8:30. So we're going to get a new 30-minute candle. So if I don't want to trade this right now, I'm going to try and wait it out another 3 minutes and wait for the full closure. See how maybe Comex came down, came right back up, back in here, and then we trade at 8:30. Okay, good push on gold, coming right back up. Okay, and half the candle is exhausted. Remember, like last Friday, we were trading 1 minute, and we got in more trades because on the lower time frames you can look for more setups and things like that. But on the 5 minutes, you see you gotta wait for a 5-minute candle close. Like on the 1 minutes, this is how the 1 minutes look. They broke right there, came back up. But we'll save the 1 minutes for we got Tuesday and Thursday this week. And maybe this Friday we'll do a 1 minute session. But right now, let's just stick with the 5 since we started watching the 5s. If you guys only want like 1 minute analysis and scalping, you guys let me know, and maybe we can make it an everyday thing. But everyone really needs to understand proper risk management and trading 1 minute candles, and also to know sometimes you might be in a trade for 1 or 2 minutes, 1 or 2 candles. If you get 20 or 30 or 40 pips, like last Friday, we were taking our stop loss going to break even. We were scaling out. So you kind of got to get to know how to do that, because a lot of traders that are learning how to scalp 1 minute candles, they got the wrong idea where they think that they can scalp 1 or 2 minute candles and hold it for multiple hours and turn it into an intraday trade. And then they don't like scalping, but they're not doing it the proper way, how it should be done. I would love to turn a scalp into an intraday trade and hold it for 2-3 hours and get 500 pips, but sometimes it doesn't work like that. 1 minute candles, they range. If you know that the range is only 30-40 pips, like a lot has to happen to get 200-300 pips out of that. I could take 10 trades for 30 pips, 10 scalps for 30 pips and get 300 pips, but to turn one scalp into 300, you got to have some big news or something to happen. Okay, so here we go. 30 more seconds to go into the close, and we're going into 8:30. So what you could take a look at too is your 30-minute time frames. Okay, so just looking at gold on the 30 minutes, they're not doing anything. Like it came up, back down, came up, back down, came up, back down. A lot of choppiness. NASDAQ on the 30 minutes came up, big bearish candle coming back down. So it looks like here's our 30-minute neckline. Here's the big 30-minute support. This is just like the inside consolidation. So markets are not doing much this morning. Okay, again, we might have to wait for Wall Street. Okay, so gold closed back below there. They came down and they closed it below. So let's see if the sellers might reject this and maybe continue to push this down. But gold is still bullish, coming back inside here. And NASDAQ, let's see if it will break this green zone. Will it be an impulse that comes back up, or will it hold this and then we're going to get that second leg coming back up? Okay, so this might be possible second leg territory over here. But let's just see how it reacts in here. Okay, so gold came in and got rejected. Might be looking for a short position, okay? So I'm going to take a sell on gold. It's a shooting star candle. I'm placing my stop just above these two high wicks right over here. And I'm looking to break that trend line and maybe possibly trade a little bit into this green box. So I'm just going to attempt a sell on gold and see if it can break down, fill this wick, take out that trend line, and maybe just trade back down where all of these wicks are. Okay, so I'm in a sell on gold, testing things out here. Again, let's get the measuring tool just to see if we do fill back down to that wick. That's about 25 pips, just filling back down that low. And then maybe if it can drop down there, it's about 30, 35 to maybe possibly 40, somewhere down in here. Okay, so I'm just testing out a sell on gold in here. And my stop loss is just above the consolidated zone and just above those two wicks right there. Right there. So I'd like for a bearish body to close below that blue candle right there. If it can push down and close below there, because then maybe we can get some more maybe bearish momentum hitting the bid down in here on the 30-minute. Okay, so half the candle is gone. Now we got to see the second half. So I waited for it to open. It came up bullish, got rejected, and then as it was a shooting star candle, that's when I sold. Now it's turned into like a spin top where you got buyers are buying down here, sellers are selling up here. Again, got to wait for the candle to close. That's the thing on the 5 minutes. 1 minutes are a little bit faster. They move a little faster. You got to open close every 60 seconds, but on a 5 minute, you know, you got to be patient with it as well. Okay, so it's pushing back down, but the closure is the most important. Okay, so it is breaking, but this one broke too and came back up. So let's see if we can get that momentum and closing below here. Good move on NASDAQ right here, right off that green box. Damn, nice little bounce off there. Okay, that's the push on gold, but remember the follow through and the close. Okay. Okay, so that candle right there is about 20. Remember what I said, if it fills 25 pips. Okay, so if we can break down to there about 25, 30, I'm going to start reducing my risk and taking my stop loss down. Okay, so here's the close in the next 50 seconds. So can it take out that low? It's oh man, equal bottom lows. It's kind of like the ugliest thing I want to see. So it's got those equal bottom lows. So this is where it could hold and turn back up. Okay, so we want to see maybe is there going to be one more push coming down in the last 30 seconds to take out that low. But also what we need out of this candle is to close below this bullish body right here. So those are those equal bottom lows. Believe me, I hate them. I hate them. I hate equal highs. I hate equal lows, depending if I'm buying or selling, because they did not allow the market to break right there. So you see now the buyers are bringing it right back up. So can we at least get an engulfing candle out of this? We might not even get that. Holy. Okay, so you see, it brought it right back up. It opened ignited. So we got to do like kind of the 50% rule. Okay, so 50% of our bearish volume is kind of right where I entered. So I'm using my entry as my resistance right now. Can we continue to push down on this, or the buyer is going to bring it back up? Okay, so I didn't reduce my stop loss when it came all the way down there yet. I was hoping that it would break that low. It didn't, so I'm still in the trade. It's in just a little bit of profit here, but we'll see what happens. But it could definitely come back up. Okay, so sellers now testing again to push down that wick, hopefully with this volume that they can actually break it. But if it's a higher low, then you can see how the depth of market is building below here, okay? So I'm hoping maybe that this 30-minute volume can continue to push and fill in these wicks and try to come back down. So we got 24 minutes left on this 30-minute candle, which is a lot of time, but we're watching it in 5-minute increments. And there could be maybe like in the markets, maybe like a little bit of resistance being formed up here. See, if I was on the 1 minutes, I maybe would have acted a lot quicker. You see how that 1 minute candle came, and right there, that's where sometimes 1 minutes are. I like trading these guys a little bit better than the fives, because fives you're waiting, and but it is what it is. That's what you gotta pick your time frame that's best for you. But still watching these fives, okay. So it's still trading inside here, but this could be where there is resistance. It's barcoding, bearish, bullish, bearish, bullish. Okay, so now it's testing in that red zone right there. That's where we had multiple rejections to the downside. But this is a lesson, guys. So when you see equal bottom lows, you see how the market shifts direction, okay? So, and I always state the importance and the relevance of equal bottom lows. The depth of market is building and not allowing for that new low, because if it broke, could have broke the entire structure of this thing. So they held it right there. That's why I said, guys, as soon as I saw that equal bottom low, I said, oh shit. And then you see the response of the next candle. So if this closes above here, this zone is going to turn green. And again, this is now drawdown stop loss area for me. So just waiting for this candle to close, less than 1 minute to go. Okay, so far there was a nice rejection up there. But again, where will the body close? Will it close back below here? Will it close above here? 30 seconds to go. We've got, again, just this barcoding consolidation. Bearish, bullish, bearish, bullish. Okay, so there's the close. So unfortunately, I got to go red to green in here because now it could be retesting this and be support and coming back up. So I'm going to maybe wait one more candle to see if the sellers can bring it back down in here. Okay, if we can get that move back down in here. Okay, so now it's retesting the green box. So it got that wick in there. So if they flip this candle, then we could be filling back up here. I'm short on this one, yeah. Doesn't look like it's going to work out now, but we'll see. Yeah, so those equal bottom lows destroyed this structure right here to the downside. So they came in. So let that be a lesson, guys. That's a good lesson to learn. Anytime if you're in sells and you see equal bottom lows, you should be having a little heads up. And anytime also you're in buys and you see equal tweezer top highs, should be telling you something, okay? But right now, the market did not want to break down there. It was coming down nicely, but they held it up there. Yeah, we'll look at Dow after 9 a.m. At 9 a.m., we'll get to the Dow. Wait another 20 minutes, then we'll analyze Dow, and then we'll have three securities. We'll have gold, NASDAQ, and Dow going into Wall Street. And if you're trading NASDAQ, okay, so we just bouncing around in here. Green zones holding support. Red zone is your resistance. I'll get rid of that red line inside here. So this is how NASDAQ is just trading inside here. Gold is being stubborn here too. So if you do get a breakout on NASDAQ, okay, if it breaks that red line, that was that previous 5-minute wick right there. And then you also got your 200 EMA now is kind of meeting up at that hourly resistance right there at 21,180 right there, 177. So if you get that additional move, you just got to watch up there but I would be watching to see if volume closes above here. Then we can maybe change this red box to green and maybe get that next bullish move. It's got like a double bottom. This is the big neckline here. So I'm waiting for this bar to close. I'm in drawdown on this gold trade. But I like to just wait to see how it will close. I'm stuck in a choppy area, you know. Sellers are stuck, buyers are stuck in here. It's just, you know, the market is probably just going to consolidate in here. But if it starts to move to the upside, that's where my stop is. I don't want then gold to break out and I still want to be in this trade. So that's the maximum risk I'm giving it. But again, you got to wait for bodies to close. Do we live trade daily? Yes, we do. Yep. Okay, so here's the close. right at the green zone. Okay, so they opened it bearish, ignited, pushing it down. Sometimes when you see this, it's a quick push down, then it will pick up a wick and come right back up. Okay, so I know this from buying and selling too. But it opened below, they pushed it down. So this zone traditionally is red now. It was a bearish ignited open right below that 9 EMA green line. So they did push it down. But sometimes when they do that, push it down, it's to quickly get those buyers and bring it right back up. But this is actually a nice bearish candle still pushing down. Okay, so it's now back in profit, but that's not what I'm looking for out of this trade. I want to continue with this bearish volume to close below this structure so that I get a more powerful candle that could maybe fill these wicks and continue to break these tweezer bottom lows. So I got to wait for now this bar to close in the next 4 minutes. So right now it is bearish, ignited, pushed down, but like I said, it could just come down, go back up. But let's see how the follow through is on this. And remember, I based this trade on the new 30-minute candle. So I see now the 30-minute candle has made its way up to just above 50% of the previous one. And now it's a shooting star candle coming down on the 30-minute, okay? And yeah, thank you. And Sam, a new 15-minute. So, and then you can see here on the prior 30 minutes, where it came down, went back up, came down, back up, came down, back up, came down, back up, came down, back up. So are we just going to continue come down and go back up, or are we actually going to get bearish volume, maybe pushing down, filling these wicks, and then if we can break that area, maybe we might get that next push down. So we'll see. So I encountered first at the start of the trade, it went up 25 pips, those tweezer bottom lows. It came back up. I encountered some drawdown there, and now it's back in profit, but not what I'm looking for. Looking for volume to close to get that bigger push. Okay, so maybe with this next leg down, it could be the leg. Look at NASDAQ too, how it opened, came down right to the 9 EMA and pushing back up. So it's trying to break this resistance area. Let's see if volume will close above here, and let's see if we can continue to push down with this gold trade that we're babysitting over here. Okay, there's again that big push. Okay, so now can we break those tweezer bottom lows? That's going to be the big question. Okay, we need to create a new low in the market. Okay, we don't want to come up with a higher low or triple bottom lows. Okay, so far they got a wick and didn't break the structure as of yet. 2 minutes to go. Okay, remember the open was a bearish ignited open pushing down. Okay, so we got a lot of bearish volume still above us. So hopefully they absorb these buyers that are buying right now. Okay, that was a nice good push down again. But there's a lot of buyers right in here. So this is the area that we need to break. What does ICT call this when we break this? There's the break now. There's the push. Okay, so now we came to the top of the green box right there. Okay, so that is a good interest point right there. That should be, see, 40 pips down to there, okay? So normally I should be moving my stop loss to break even right now, but since we're 90 seconds to go into this candle, I want to see how we can close with this, okay? So remember, this is the 30-minute push that's coming down. So we did, in fact, break those tweezer bottom lows. We did create a new lower low, but you see how we tapped into this big green box. Okay, so we just triggered lots of buyers in there. And now again, it's coming right back up. Oh shit, this is a roller coaster ride here. With 1 minute to go. So again, now following the candle, we did create a new low. Can we get volume close below these current bodies? So this candle did its job by breaking the low, but it wasn't a good follow through at the end, but we still have 30 seconds. So remember, we judge a candle on the close. We don't just judge a candle how it opens and how it you judge it on the close. We can see the direction of where it went and what the response was, the reaction down here. Definitely we can see that, but here's the close in 10 seconds. I would definitely love for this volume to close below this bodies, okay? Then we're closing below structure. If we can close below this, those tweezer bottom lows, that red line, okay, so we close right at it. So if we do come up now bullish, where's 50% of that? Let's get our cut line. There's 50%. I'm going to just keep it exactly right where those bodies were, point of interest, body, body, body. So if we come back up now, that's where we should see sellers holding this move down, okay? Maybe I'd like to see a lower high where it doesn't even need to come into here. Okay, maybe if we get a lower high right now and then a push down, fill that wick and drop back down. Okay, so we should all be in the money a little bit right now, but if we can come back and fill here, we're up 40 pips and then break, that's definitely what I'm going to break even, and we'll be scaling out a little bit. Okay, so we're pushing down back down to 40 pips. Let's see if we can break and then we can take out, but remember we're trading in a big green zone here. Okay, so if we can break now, I'm going to go to reduce my risk now, break even, okay, break even, and we're pushing down, oh shit. Okay, I'm going to take out 80% down here. I'm going to take out 80% of this trade at 40 pips, 80% out, and I'm leaving 20% running with break even. We got that, guys? Okay, it is a Monday. What the hell did I just do here? Sorry, I moved this thing. Okay, are we good, guys? Hit the likes if you understood taking the trade, how to deal with drawdown, coming back down, back in profit above 40 pips, taking out 80% and leaving now 20% with a break even. Okay, it's in a live situation, guys, so I can't control how the candles move. All I can control is the reactions to everything. So did you see me panic when I was in that little bit of drawdown? No, because I didn't over leverage my account. I gave it room to breathe. That's the importance of utilizing a stop loss and where to place it, and your sizing. Okay, and then runners, if they want to continue to go, I can bank more pips on a runner, but the bulk of the trade, 40-45 pips, was taken out. Okay, so we made something out of a, like a consolidated area, but it worked out in our benefit in this situation. So now we're running 60 pips, and the big areas down here, there was a wick, a wick, a wick, a wick. So if you want to draw yourself like a zone, so you can see right there, draw yourself a box. See there where it was a green box? If we're coming right back in there, that's where, right there. See how we're coming in right now into it? That could be where the big move kind of reverses. And that would be about a 70, 75 pip trade coming down into there. Okay, so I'm happy with that. Tanvir, don't spam the chat. I can read. I'm not mentally challenged. I can see that you wrote, sir, Euro USD, please. You wrote it 14 times. I just need to see it once. Okay? We're not on Euro USD right now. Okay? So guys, if you didn't scale out, that could be like a full TP. That's maybe where you want to take out 80% down there. I went a little earlier, but right there is a good opportunity to take some pips out of the market. Since I have 20% running, what I'm going to do is take out 10% of my 20% runner, bank on those additional pips down there, because I see it's coming to a very big structural zone. So now I took out 10% of those 20% remaining, and now I only have 10% on this entire trade. That one I'll leave if gold wants to continue to go for the entire day. It's kind of like my runner for the day. At a break even. So I got 10% running for the entire day. Hopefully gold continues to break down and that runner goes, but 80% was taken out here and the additional 10% right there. Okay, so that's how you can continuously grab some pips. Okay, but I'm respecting this green box because I can see when gold came down here, it went back up. Gold came down here, had that big leg up. Gold came right down there at that next leg up. Gold came down there again, had that next big leg up. But right now we're coming down. I know it's a lot of selling pressure. Like, this is what we wrote. Remember the 30-minute candle? So that's why I said, guys, let's watch the first 10 minutes of Comex, and we're going to trade the 8:30 candle. So And then now looking back, you can see how the 30-minute candle kind of came back up. That's where I was in drawdown, but it still respected the previous 30-minute bearish bar that engulfed that previous one. And now we're getting the big momentum filling all of these wicks. But this is that big zone right there. So if it continues to drop, you're going to look for maybe down here, this point right down here. I would like right here, right here. See where there's a wick, a wick, a wick, a wick here, a wick there. Then you got a body and a body. So the next area to continue with the runner, 32,229, 32.30. That nice psychological area. Okay, so it's really pushing down nicely. Yeah, there's the next push. Okay, so it didn't close below this green box yet. This is the impulse break below there. If this bearish 5-minute candle closes below this green box, we're going to flip that green box red. And it might be acting as resistance for the next little bit. Okay. Sorry, I'm not trying to move this. I want to move this thing. Wow, shit. Might come down to that red line right there where we just marked it. If it comes down there, that's 120 pips on that runner. Oh my goodness. Shit, I took out too early. Okay. I maybe had to do another hair transplant. You know, when I was in drawdown, you'll probably see Ron going receding live. You're going to see Ron losing his hair live, and then I got to make some more pips to go back to Europe and do another transplant. So, wow, what a move. Holy shit. And I know some of you guys are still holding the trade. If you guys are, congratulations. That's perfect. But reward yourself too, okay? Reward yourself. You know, it's don't leave too much pips on the table, because we're pipping for hair transplants and LASIK eye surgery over here at SSD. I don't know why I'm sharing these things live, but I don't really care, you know? What are you going to do? Now you know how transparent I am. Unless you want some liposuction, okay. Pips for liposuction. But I don't believe in that. That is diet and just a little bit of effort in the gym. But I've never done anything like that. Just hair and eyes. NASDAQ, okay. NASDAQ also over here. We're getting an impulse break, okay? So it closed right now. This is an impulse move on NASDAQ. It's going to close in 1 minute and 45 seconds. So if it closes with the volume above there, we'll flip this red zone green, and maybe any pullbacks, we could be buying in this and continue to move back up. So remember what I was saying. Keep an eye on up here. Look where the 200 EMA is and at that hourly white line. If it continues to break this, fill this wick and drive, that could be a good area if you're looking for buys on NASDAQ. Alex, calf implants for Ronny? No, man, I got good calves. I used to train, okay? Believe it or not. I got big calves. I'm a basketball player. I'm a soccer player. I wear shorts in the winter, all because I like to show off my calves. Knee replacements, Sonia. Yeah, we're going to get pips for knee replacements. Believe me, I'll be there for a knee replacement soon. My mom, 80 years old, just had her knee replacement. I got some pips for my mom, and she got her knee replaced. Yep. We're pipping for surgeries now. We don't need vacations. We don't need fancy cars. We don't need bigger homes. We need hair, eyes, and knees. Wow. Okay, so you see that red line there? I didn't just pull that red line out of my ass. I went to the 30-minute candles, and you can see structure over here. A body, a body. A wick, a wick, a wick. Okay, so now we're tapping into it. If it continues to break, your next point of interest on the 30 minutes is, that's the big one right there. You've got 3, holy shit, guys. What is it? Is it 9? We got a new 30-minute ignited bearish candle that just opened. Oh my goodness. Okay, I'm losing track of time here. We're having too much fun. But there's the 200 EMA on the 5s. Like if you follow that down to there, but that's good enough, guys. That's 140 pip drop. Hopefully you got something out of there. Hopefully you're all at break even, and now the rest is just managing your profit. Everyone does a different thing. Some of you guys want to keep runners all day. I got that 10% runner and it's up almost 140 pips. So had I wished I kept more, yes, absolutely. But it's not how I trade, guys. Remember, I trade like the same style every single day, because it could have just came down there and went right back up, and then I would have been saying, oh, damn, I should have taken. So I don't play that game, guys. What I do is I like to take out the bulk of the trade on a nice move, 40, 50 pips in this situation, and leave the rest running, okay? But I don't want to just sit with gold all day today, okay? Because if not, we're just going to, I trust that you guys can monitor this yourself. With NASDAQ, guys, did that base candle close above? Yes, it did. Flip this red box green, and now it could be acting as support for the next little bit to make its next move up. I got to do US 30 because I lost track of time, and it's 9 a.m. FX Max, you almost got a warning for watching our stuff during work, but I'm glad you're in that trade. Yeah, don't careful at work. Don't get written up at work if you're watching this. But I do appreciate that you're watching us and tuning in while you're working. Hopefully we can catch you some pips while you're at work and make it a good work day for you. But be careful, okay? If your boss is there, let him talk to us. I'll teach your boss how to trade too. Bring your boss on here. Bring your, whoever it is, your boss, your manager. We'll teach them how to scalp the markets. Maybe he'll make more than what he does at work there. Get him to tune in. We'll teach your whole entire work how to trade the markets. Okay, guys, so I'm going to do US 30, okay? So please monitor this yourselves. Hopefully everyone is in some sort of profit. You're at break even. I can clear my head. I don't need to recede my hair anymore. And I'm going to move on to the next security for us. We've got NASDAQ. Now what we got to do is miss Dow Jones, okay? She was good to us on Friday. Let's see if how she's gonna move today on a Monday, okay? Mark, what are we made out of? Cardboard? Yeah, as we get older, yeah, the bodies start falling apart. Okay, so let's do NASDAQ over here. Full top-down analysis, guys. So this is how it's moving on the 5s. But what we're going to do is we're going to go to the daily, okay? All right. So now we're on a different security. This is US 30. Had some significant news last few weeks. Anyone want to tell me what the significant news was on US 30 last week? Who's gonna educate me now? This is where I test you guys. You guys teach me. Was there a big security, big name security involved in US 30 that made significant moves last week? I'm not going to do the top down until someone answers me this question. Yes, Lee, United Health. Perfect. What is United Health? UNH is the ticker. United Health comprises approximately 10% of this entire index. And this index is not S&P 500. It's not 500 corporations. It's not NASDAQ 100. It's not 100. This is US 30. So it's just 30 corporations. And United Health comprises approximately 10%, 1/10 of the entire weight of this index. And they took a substantial hit from, if you look at their charts, on fraud probes, on it, the CEO, the new CEO resigning. There was a nice little bounce last week, but ultimately it was trading at like $600 and dropped down to $250 a share. It bounced back up to 300. Let's just look what it's doing in the pre-market right now. UNH real quick. let's see what it's doing. What is it doing? So UNH is up 5% in the pre-market. So remember what I said, that the market was pretty much red across the board? I didn't look at United Health. It's up 5% in the pre-market. It's at 305. I've got call options on this. I bought that when it was at 250. I saw that. That was a huge drop. I tested out the 275 call options, and they are in the money. They're really good in the money. I held over the weekend. I can't wait to see what Wall Street opens up. Those options might be up 200-300% right now. So I just thought it was a great discount. I didn't think that this thing is going to drop down forever, but 250 was a good support level. Okay, so now maybe we'll utilize that going into the open, but let's just continue with our top-down analysis. There's the double top all-time high supply, 45,000. Okay, nice psychological area. What platform do I use options on? TD Ameritrade, TD Bank. I do that lead straight through my financial institution, my bank that I have everything with. Okay, that's what I would suggest. If you can't trade with your own bank, like stock and options, go with Questrade. Go with Interactive Brokers. Robinhood is okay, but they had their issues that back in the day with AMC and GameStop that I don't respect. How they shut down their platform for 3 days and they didn't let anybody get in and out of their trades. I don't like that. TD, I was in AMC, I was in GameStop when that shit happened too, and my TD Bank allowed me to get out of the trades, no problem. So I don't like that. And the CEO is making up too much excuses and bullshit. So I stay away from Robinhood, but I know it's a good broker. But I don't like stuff like that, where they make up their own rules on the fly, and it's not right. So never had any issues with TD Ameritrade. And they got good fills, good market executions. I'm all about that. Got fairly good commissions. If you do take more than 100 trades a quarter, you can reduce your commission significantly. So I do trade more than 100 times per quarter, so I do have low commissions. But anyways, guys, we'll talk about that when we get to the stock and option program. But right now, okay, so what did I just do there? There was a base of support there, came back up. When it came back in the green box, it went back up. Here it broke below. Let's just get our pivot points. Yellow line right there, where it pivoted down and stopped. Okay, so you can see it held support, came back up. Now look at, wow, where we're trading. Okay, so as of last week, right here, this is a key area on US 30 that everyone should be watching for. 42,800. There was a body, it came back up, it retested and got pushed down. It came back again right here, lower high, they pushed it down. Now we're building. So are we going to come back up to 42,800 this week and maybe break above here? If we do, again, right there, you can see where there is daily points of interest. Right here, where there was that neckline right there, where it was resistance, turn to support, turn to resistance, turn back into support, holding as support. Now it could be resistance at 43,300 up there, okay? So just looking at what we got now. Now let's go more recent last week. Monday. Bullish ignited candle. Remember the weekend news last week. In Switzerland, China and the US were negotiating their tariffs. Some positive news came out of it. It's funny, guys. I want to talk about Donald Trump, how funny the guy is. He increased the tariffs to 145% and thought it was the art of the deal, and he thought China would cave in. China didn't cave in. They didn't even negotiate with him. They didn't even talk to him. So then he begged to meet them in Switzerland, and all he did was reduce the 145% down to 30%. It's still 30% tariffs, and he was saying this is the fantastic art of the deal. You didn't do anything. All you did was basically just your extreme tariffs, you just reduced it because China did nothing. And you're seeing your supply chain there's no ships coming into the LA ports, and Walmart and all the CEOs are telling you we're going to have a lot of issues here if you don't fix this shit. Amazon left Seattle. If you guys don't believe me, look it up. They left. Amazon and Jeff Bezos left America until the tariffs get fixed. That's big news. The market liked that there's a reduction in those tariffs, but I don't like how Trump is saying, oh, it was all part of the deal. It was all part of the deal. No, it wasn't. That had nothing to do with your deal. They called your bluff. I play poker, and they can see they called your bluff, and you kind of, I don't know. I don't want to get too much into this because I don't want to get the YouTube channel shut down. But I have my own opinions on that. If you think it's a great art of the deal, then we got to have maybe another conversation. Let's go for a coffee and we'll talk off of YouTube. But over here, okay, so we had that big day Monday. If you figured out where 50% was or that zone, look at that nice pullback you had on Thursday coming back up. So did it come down? Pivot point? Yes. Let's draw a yellow line right here. And it did come down, come back up. Nice bullish candle. Now, are we holding 50% of this bullish candle? Yes, we are. We even have tweezer bottom lows. We were just talking about that on the 5 minutes right now. Look at right there on the daily. Pretty much identical lows from Friday and today. I'll get to that when I'm dissecting today's daily candle at the low point. But look at how we're breaking. Another point of interest is right here. This is where we're trying to break right now. The highest point of the day is right here. Right there, okay? So now, look at how we closed very strong on the Friday. Remember, good close on Friday, but remember the Moody's report, the downgrade, okay? Came out Friday after hours. I'll show you exactly on our news feed when they released it, just so you guys can see how the markets operate. That's why, you got to be careful with taking positions going into the weekend and things like that. But so we closed right there on the Friday. They gapped it down right here. This was the opening price right here, okay? And it opened, so, and that's the highest point right there. That's my high of the day. So I'm making a purple line. 42,000, 447.92, 450. Psychological area, highest point of the day, and it matches up exactly with these bodies right over here. So now let's follow this candle. It opened bearish. That report from Moody's wasn't the greatest for the US dollar. So we see that the stock market went US 30 bearish, bearish, bearish. Look at the lowest point of the day. Now let's pinpoint. Now we're going to see, is it actually a tweezer bottom low? This is where we get real technical. So what I do is I drew the lowest point right now of today's candle, and then I see it's not actually an equal low. It's a higher low technically from Friday. So they are building a little bit of structure, and the buyers, it came in the big green box. They're pushing it back up. They're pushing it back up, and this is where we are right now. So are we going to flip this candle and turn it into a hammer and start driving today? Is the market going to continue to flip, or is it going to just continue to come down bearish? So if it comes back down, we're going to test the top of the green box. If you need to place a yellow line there, you can, but if you just go by the box system, there's the first point at the top of the green box. Right there, 42,338. If it comes all the way back down to the purple line, we test the low of the day. If it wants to continue to drop, right there, you got a body and a body. 42,147, 42,150. That nice. We trade in an auction. These are auctions, okay? So you want to stick where most transactions psychologically happen, at these psychological numbers. That's where efficiency happens in the market. They can get more transactions faster and be very efficient in the markets. Money is time in the markets, right? So you save some time, you can make lots of money. You can transact more. So you see now how I have my points of interest if we do come down bearish. That's good enough. Testing this. Now what I also do is, remember, of the active volume from here to there, I know it's moving and it's quick, but I want to judge where 50% of the current bearish volume is. I know it's moving, so it's not going to be 100% accurate here, but there's about 0.5%, okay, right there, of the current bearish volume in the market, right around there. So if we do look at the number, 42,399, 42,400. So if it does come back up bullish, that's where I expect sellers to be to push it down. If the buyers can get above 42,400, maybe we can flip and come all the way back up, okay? So there was a massive gap down in the market. And then if we do continue to push up, point of interest on Friday's volume, there was the close right there. But again, look at from the purple high to the yellow line. If you want to grab 50%, grab your Ronny tool. and go from the purple to the yellow line, and there's 0.5. So, you know, if you're going down to the lower time frames from the daily to the hourly to the 5 minutes, now you're getting your points of interest right there. Perfect. And now we've kind of gave ourselves a little grid map of where US 30 can go for the next little bit. But we still have to acknowledge it's a bearish candle, okay? There was a big gap down. Now let's go to the 1 hour because it's 9:15. We got to get moving here. So now we can see the hourly candles. When they started to have a bullish move on Monday, all the retracement, the entire look, Tuesday, Wednesday, Thursday, okay? The market came back up, and this is how we were trading on Friday. Look at big bullish move, noon, 1 p.m., 2 p.m., 3 p.m., market close, and then Moody's report dumped the market back down. Now this is how we're trading on the 1 hours, okay? So you can see the 1 hours have some structure. They're struggling to break this purple line. Here it got rejected, rejected, rejected. There it closed, bearish engulfing, come back down. Here it came back up, back down, came back up, back down, tapped into that purple line, back down. We're trying. So if you want to draw yourself an hourly zone, utilize your purple line as the point of reference, come down to where those bodies are and stretch it across. And you see, if you make it red, now you're giving yourself a zone for it to come in, go back down, come in, go back down. Here it closed. It should have opened and gone. It didn't. They brought it right back down. Then this big bullish bar at noon on Friday closed above. Then they closed it below. Here was a retest back down, retest red box back down, retest red box back down. So if we continue with this zone, now I can see how it almost came in at 7 a.m. It tapped in there at 8 a.m. and 9 a.m. is coming down right now. So we're getting into Wall Street hours, but this is now our resistance. It looks like it could be maybe a head and shoulder pattern. Here's your left shoulder. There's your inverted head. We're back in the consolidation shoulder right here, right shoulder. Might drop back down and test the low of the day, maybe drop down a little further. Okay, if it comes down and builds higher lows or respects this, it could come right back up again. And then, but we got to test this yellow line, that yellow line, the red box. If we have a break, is it going to be an impulse and they reject it back down, or is it actually going to close above there? Then we change this to green. We're retesting this. Then we're coming up to yellow line, and so on and so forth. Okay, but right now, we've got a bearish candle coming down. Do we have hourly points of interest? Somewhere inside here. Like, where can I place a white line? Now, this is where, you know, it's it can get a little tricky in here. But first thing I look at is, was there a base of support somewhere? Here I've got a body, a body, a body, then a wick, and a wick. If I look in the past, I got a wick, I've got a wick and a wick and a wick and some bodies. So maybe right around there. If we do come down, that could be my hourly support. I'll see if it can come down. It almost came down, but it didn't touch this white line yet. Okay, so now what I do is, it's tough here because we do have this trend coming up, and this could be the pullback to continue to take the market back up. But I don't know how Wall Street's going to react to the opening of that Moody's report, so we might get some volatility. So we just take it, again, candle by candle. So let's go to the 5 minutes now. This is what we're watching today, the 5 minutes. So they were trading down. What time did we hit the lowest point of the day? 5 a.m. Hourly open, low of the day, come back up. So you can see now that white line that I placed. Now I can see the reaction of the 5-minute candles. How they came up there, back down. Came up there, back down. Impulse, 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 back down. Impulse break. Close it below, big bearish candle come down, 6:30, and come right back up. You know, so here we're coming down on the 5 minutes. Here's like an M pattern with a lower high shoulder where it came up. There's the neckline, point of interest right there. It came back up, lower high, and they pushed it down. They broke it, they closed it below, and they're dropping it down. So right now, can we place a point of interest on the 5 minutes? Right here, the neckline, right there. Where it was, sorry, I'm going to get wrong line, I'm sorry, right there. The red line, right there. So you can see that that broke, it actually did close above. So now it came down, and now it's coming right back up strong. So will it close above here? And will Wall Street open bullish and come back up here? Or is it going to be like a fake up and then they continue to drive it down, okay? So definitely this is going to be interesting for Wall Street in the next 10 minutes, okay? So we've got our zones, remember, big red box. This is a daily point of interest. This is just that 5-minute neckline. daily point of interest, hourly support, low of the day purple line. So we'll see what happens. Now, can I just add some EMAs like we did on the other ones? 9. So we're below the 9 EMA. Where's the 200 EMA? We're right at the 200 EMA. Right here, still holding. So the market might consolidate right by this kind of neckline right here, okay? So we might consolidate, and then Wall Street might be a move to the upside, could be a fake out too. It could be a move to the downside, could be a fake out to the downside, but again, let's take it candle by candle, right? That's all we can do as traders. We all have biases, like some of you guys might have a bullish bias, some of you guys might have a bearish bias, but it's great to have a bias as well, but it's also important to watch how candles close, okay? So gold now coming back. Wow, look at gold. Holy shit, okay? So you see that runner we had for 140 pips down there? Had we not done anything, look at now. This is the woulda, shoulda, couldas. If you didn't take any money out, look at what it just tapped. It came and just tapped right up to that red box, what we had, and pushing back down. So, oh my goodness, okay? So you can see how, even if you go up 140 pips, how you can get stopped out at break even. It's unbelievable. These markets are ruthless. That's why I do not leave money on the table, okay? So I told you, I closed out 80% on that move coming down. I closed out, I had 20% running. I closed out another 10%, and I left 10% running, and that actually got tapped out. So you see, if I was my entire trade, I would be devastated right now. You'd probably see Ron, I would be balding right now if I just lost all that, okay? So that's how markets work. That's why don't trade with woulda, coulda, shouldas, this, that. Trade to a plan every single time. And if you're making pips, be happy with it. You know, like don't get upset. If you take some pips out of the market, because look at what could happen if you didn't take out anything. Okay, so gold will be over here. I'm gonna remove this, like the trade. I want us to focus more on the price action now, since that trade is done. Okay, so gold, we've got NASDAQ, okay, still getting rejected here. So it was kind of fake out up here, where it kind of closed, didn't come back up, closed below, big bullish candle, kind of came all the way down. So we're trading in here. NASDAQ, we'll see for Wall Street, will it break above here? Will it break down here? And US 30, okay guys? So we've got about 8 more minutes to go. If you need to take a quick break, grab a drink, go quickly, and come back, because we got about another 8 minutes to Wall Street, and we'll be watching what's happening. So sometimes now what I do is I tidy up my charts, clean up a little bit. Continue with this red zone, because it's now what I do is I adjust it a little bit for gold. But I'll be watching more NASDAQ and US 30 for Wall Street market open. We already did the gold trade. Hopefully some of you guys banked on that one. And now we're going to watch what's going on over here, okay? Any questions, guys? How did poker help with trading? Oh, it helped a lot. Poker, to be a successful poker player, I used to go to Vegas almost every weekend when I was younger and play at the Bellagio. The 30-60 no limit table, I used to love it. But you get to see tells, like on your opponents. Okay, that's why I was saying Trump, like China called out his bluff. You know what I mean? They called him out and he froze. So that's kind of like a tell. If you can tell these things in the markets. When you play poker, you calculate pot odds. For example, for me to call you, if I got to call you at $100 and there's only $200 in the pot, is it worthwhile? That's a 2-to-1 on my money. Maybe I don't want to call maybe like a up and down straight that has like a 10% chance of hitting just to win a 2-to-1. The mathematics, the probabilities are not there. But what happens if I have an up and down straight with a flush draw and I got 2 more cards to come out? Now maybe my percentage is maybe 30-40% of hitting that, and there's $1,000 in the pot, and it only costs me $100 to call that. So now I'm getting 10 to 1 on my money, and I've got a 30-40% probability of hitting my cards. So that would make more sense to take that trade. So the same to take that in poker, but the same thing is in trading too. So if I'm going to take a trade, you got to calculate what you're looking for maybe 40-50 pips. How much are you investing, and how much can you get out of the trade? How much are you risking? Are you over leveraging, and all of that? So you can utilize, even sports analogies too. You can utilize anything you learn in sports, anything you learn in playing poker, how to trade the markets as well. It teaches you a lot of skills. Poker teaches you discipline. You don't want to trade when you get a 10-8 unsuited. I know some traders think it's a great starting hand, but you muck that hand. It's garbage. You're going to go against a lot of big hands, and it's going to cost you. So you got to be patient in poker as well. Wait for your big suited connectors. Wait for your pocket pairs, and hopefully you can see a flop at a reduced rate discount. So it's a different game. It's a different psychology. But I love poker. We'll get into that. We'll play poker live together. Teach you guys a few things about playing poker as well. But we don't gamble. We don't gamble. We don't gamble. You can do really good. I started at the height of that online poker when Party Poker came out, Full Tilt Poker, if you guys remember all of that back in the day. But okay, let's focus on trading right now. Yeah, the World Series of Poker. I played in those, Lee. The World Poker Tour and all of that. Oh, PKR. Yeah, I remember that. Barney. Yeah. Celeb, do we have any negative news that might influence the NASDAQ to trade lower? The Moody's downgrade. Now we're going to see how the market reacts to it. So this over here, really quickly, guys. Where's our website? Right over here. Our website. I did a blog on it here. Right here, Moody's. If you don't know what this is, read this, guys, today. So U.S., for the first time in 100 years, they had perfect rating at AAA. They got downgraded on Friday evening to a AA1. That's big. If you want to see the time when they did it, if you come to Discord, guys, and you go to the news feed, I know we're 3 minutes away from Wall Street. Hopefully I can show this to you in 3 minutes. Come up here to the news feed, and if you scroll all the way Friday, where's Friday? Shit, doesn't have the dates here. It was Friday after hours yesterday. Okay, so that's let's see if I can find it. Damn, I got to go through a lot here. What day was Friday? Was it the 17th? What day was Friday? What day was Friday? 16th. Okay, so it's right in the after hours. Right here. See when they released it, guys? 4:44 p.m. Eastern when the market closed. Moody's United States ratings cut to a AA1 from AAA. The U.S. long-term local and foreign currency country ceilings remain at AAA. Moody's on the U.S. We do not believe material multi-year reductions in mandatory spending to result from the current fiscal proposals under consideration. Moody's, we do not expect that the U.S. long-term growth will be significantly affected by tariffs. Moody's United States cut. We recognize the U.S. significant economic and financial strengths and believe these no longer fully counterbalance decline in fiscal metrics. We anticipate U.S. federal debt burden will rise to about 134% of GDP by 2035 compared to 98% in 2024. Okay, so that was released right there, guys, 4:44 when the market closed. So you're telling me the timing of the market when they do these things, when you're now you're in a trade and there's nothing you can do. That's why you got to be careful. And then also the blog prior to that was trading into the weekends and on a Friday. So hopefully some of you guys understand our blogs, have to do exactly with what the markets are doing. So I try to keep up to date, Dave and I, with all of the market news and provide some blogs so you guys understand what's going on, okay? And just understanding those things will make trading easier for you. Okay, so here we go. 20 seconds into the market open, we see NASDAQ is approaching again this resistance area. Hasn't really broke down here. US 30 is in this supporting area. Again, you don't need to trade right away when the market opens. We can wait for the first 5-minute candle to close. If you do engage right away, just again, there's going to be increased volatility. So this is where you got to reduce your risk a little bit, okay? So we got it ignited, open, coming up. Very bullish right now. Are they going to reject the move back down? Where will this volume close? Okay, so we've had multiple fake outs on NASDAQ above this red zone. Will it actually close above here? Holy shit. Okay, so strong open so far. How high will it go? Where will it go? Remember this area I told you to keep an eye on? 21,180, 177, 175 right here. You got your 200 EMA and your hourly resistance white line. US 30 came up very bullish, got rejected back down. I'm going to wait for the first 5 minutes to close. Okay, so big bullish move. Again, if we're not trading this, we judge where it closes. Maybe we'll figure out 50% of it. Holy, okay, so big response out of Wall Street. Okay, let's see what's moving this right now. Some of those pre-market securities that were red, some of them you might see might flip green, but they're still red. Okay, so big bullish candle on US 30, came all the way back up. They rejected it back down. Remember, it was a bullish ignited open. Will it hold that volume? Okay, or will they flip this into a shooting star bearish candle? So same with NASDAQ. NASDAQ came all the way, cut right through that area, got rejected. Now we have 3 more minutes to go. So we're just waiting for this candle to close. Samuel, how will the downgrade affect gold and other instruments? Well, if it's downgrading, that's not good for the US dollar. It will weaken the US dollar. So just from that theory, with the correlations with US dollar and gold, we could see a push on gold, a demand for gold. Short term, is this long term? You know, so they just released that news. So we'll see how it affects everything. Yeah, it should make gold and crypto generally go up as this weakens the dollar. Okay, so strong move out of Wall Street, very bullish ignited open. So did you see US 30 how it had that big rejection candle and now it's filling right back up? So very good, strong, positive candle on NASDAQ and US 30 on the market open. 2 more minutes to go. Where will it close? Can we maybe figure out 50%? Maybe if we could look to buy a pullback, will the next bar be bearish, come all the way back down? Gold is still breaking down. Okay, so it might continue to push down. But you see, that was where we got into the sell, like kind of right over here, you know, and then that's where they can tap out all the break evens and then continue to push down. It's unfortunate when that happens. It does suck, guys. The only security I can see that flipped green so far is Microsoft. Everything else is pretty much still red, okay? Wow, okay, so US 30 is coming all the way, possibly, let's see if it can take out this high, 42,430, trading in this red zone. So that's a big candle, guys. That's a 100 pip candle just in the first 5 minutes of Wall Street market open, okay? So very strong so far. And then now we got the last 30 seconds. Wow, okay, so it did definitely break that high. If it breaks above here, where could it Where could it go? Where could it go? Okay, so there's a lot of imbalance from that big candle that pushed down. I would target maybe this area to see if it can get into here. So that red line at 487 up there. Sherry, you're waiting? Yeah, I'm waiting too. I'm waiting. Okay, so we did get the first close. So we do have a yellow line in case it does pull back. That's a daily point of interest. The 90 EMA is like kind of right there. If we want to do 50% of that big bullish candle, so you know exactly maybe to draw a zone for pullbacks here. So right there, there's the 0.5. So right in there, if I just grab my tool, right there. Okay, so if I'm just looking for maybe to catch a pullback on US 30, if it can come back down, trade into there. See how it's coming down? Will it come all the way down here? Not a red zone. We'll make it green. Okay, so if we get pullbacks in here, maybe we'll look to buy in there. But it might not come down right away. Like it might come back down 15 minutes from now, maybe 30 minutes from now, maybe an hour from now. But when you figure out the Wall Street's kind of that good demand zone, stretch it into the future. If you need to place an alert in there, you definitely can. Okay, so NASDAQ just pulled back just a little bit and continuing to drive to maybe take out that wick. We can do the same thing for NASDAQ, what we just did for US 30. And so we can get situated for maybe a pullback later this afternoon. So right there, that red line is representing 50% of that candle. So if I did the same thing with NASDAQ, what I just did, see how the red line, that was a previous area of resistance, now can turn to support. There's the 0.5. If I draw my green zone, 382618 right there on NASDAQ, stretch it into the future. That could be where I'm waiting for a patient pullback. I'm gonna set an alert there for this afternoon. So maybe I can buy that pullback coming in there. I can place an alert at that yellow line on US 30 for maybe a possible pullback at some point today. Okay, and then I'll patiently maybe wait. So I kind of don't want to buy the highs now. What I'd like to do is maybe if the market pulls back in there, I'd like to maybe possibly buy out of there. Same with US 30. If it can come down in there, I'd like to buy out of there. But it takes time to come down there. Okay, I know it's a skill that a lot of traders, they just want to buy right now the highs. And then when you do that, then they push it down and you're stuck in all that drawdown where there's more patient traders trying to buy in here. Okay, so just try it out. By just testing out this, just place some alerts in here and see if it does come down today. Could you have possibly bought that and maybe had a profitable trade come out of there? And let's just see really quickly, did we have any news for Wall Street? Was there anything today? We got speakers, okay, but not much, okay, for today news-wise. Is anyone in any trades right now? Has anyone taken anything? Or I'm just waiting, okay? We took a good trade on gold. We don't need to just jump right in, okay? This is all part of being disciplined, being patient, conserving your gains, looking for good possible pullbacks. Oil short, Nikki, nice. Ephraim, you're still waiting. I am too. Sherry, you did a scalp quick buy on NASDAQ for 20 pips. That's good. Yep. Brian, you took the buy on ES. Nice. Okay. So, but just pay attention to up here. That yellow line, 21,270 is a daily point of interest. Bigger red zone up there. Will US 30 continue to close above here? Okay, big strong move out of Wall Street. Wow. MicroStrategy flipped green. What else we got? Microsoft is green. Thank you, Brian, and congratulations on your trade. Guys, US 30 did, in fact, close above that red zone. So quickly what I do is red to green in case there's any pullbacks. If you guys are still in buys on US 30, if it pulls back and holds in here, it could continue to go, okay? This is where if you're in this, I would be, going to reducing my risk to like a break even. I would be trailing this behind because this is approximately, 150 pip move from when Wall Street opened. Yeah, 135, 140, could be possibly 150. So definitely, if I was in this trade, what I would be doing is trailing this behind, maybe taking some partials, but that's up to you, okay? Because if you got in the buys, it's a fantastic trade for NQ, for NASDAQ, for YM, for Dow over here. Because the markets could come tumbling down. Just like here, where we were in that gold sell, had we not taken out any profit, look how it came right back up and tapped us right where we got in, and then it went down, okay? So I'm kind of looking if the market will come down to maybe buy in here, maybe buy somewhere inside here. I'd like to buy a pullback. I missed the big move at Wall Street market open, so I kind of don't want to just go in with FOMO and just, trade how I used to trade when I first started trading. And that's when I was making all the mistakes because I was always getting excited. Oh my God, I'm going to miss all the move. And then I was buying the highs, and then that's when they would slam it down on me. So I've learned my lesson over the years that that's not the best strategy to trade. So now I'm more than happy waiting in here or in here. If the market naturally comes down to me, then I know psychologically I'm buying at a better area. I'm buying where there's demand. I'm buying where there's smart money. I'm buying on a discount. So check mark, check mark, check mark, check mark. And that's where maybe you can get more profitable trades. But it's just waiting. That's the hardest part. Traders don't want to wait for pullbacks because they just think that it's just going to go up forever and never pull back. If that's how you think trading is, you got a lot of reading to do. Because markets can go up and they can come down just as fast. They can go down and they can go up as just as fast. So, like for example, these sellers, like right here where we sold, if we miss this big leg coming down, look at how the market gold came right back up and traded in there. If you were waiting there, you could have executed a trade on that candle, minimal to zero drawdown, and you're back in profit, okay? It does take time to learn. I know us, we only have like 30 minutes on this call from 9:30 to 10 and then we wrap up the call. So sometimes I try to look for trades within this 30 minutes. But if I miss a big bullish candle like that, I don't want to just get into buys just for kind of YouTube and Zoom and just have a good time on here. We still got to follow principles. I'm telling you exactly how I would be trading if I wasn't trading with you guys. If I was here by myself and I was trading and I missed this Wall Street move, I'm telling you, I wouldn't be buying up here. I'm waiting in here and I'm waiting in here. I set alerts and then I could go grab a coffee, have some breakfast, allow the market to come right back down to me, and I'm ready to trade it, okay? Just try, guys. Maybe if that's what you're having difficulty with is the FOMO of fear of missing out, get that out of your head, okay? What are we missing out on, okay? Yeah, you're missing out on this bullish run, but later this afternoon, it could definitely come all the way back down in here and you're right back in. There's nothing you're not missing out on anything. It took me years to understand that. And when I fixed that, that's when my trading started to get a little bit better. And I know that sometimes if you miss a move, that's it. You got to let it go. I know it's so hard for us to let these things go. But this is a strong move out of Wall Street. Wow. Sherry, we're going to get a new level 2 analysis platform. So I'm just trying to find which one is the best one. I think we might go with NinjaTrader, just to give you guys heads up. So if any of you guys are familiar with NinjaTrader, that shows everything like the heat maps, the footprint charts, depth of markets. It's got some neat indicators on there. So Bookmap was a little bit too confusing for most traders to understand. So we're trying to find a platform that's very user-friendly, whether you're a beginner or an advanced trader, just to show you a little different side of just looking at a traditional candlestick. Okay, so US 30 kind of bearish candle coming down. Okay, will it test 50% of this bullish candle? First thing, right here is 50%. Okay, if it can't hold here, then the green box somewhere in here. I might be looking for a pullback buy on US 30 down in here if it can come down. But it might not. Maybe it just, again, tests 50% and wants to continue to move. Okay, so then maybe I got to get ready. This is maybe the possible pullback right here. Someone was saying they were looking for a buy on gold. Did you get in on this? Okay, so it came up, pullback, 200 EMA, a lot of good rejections there. And now it's kind of, you're looking at kind of a double bottom, basically, right here. Neckline, come down, coming back up. Mark, you're in from 28. Nice. Wow. Okay, so here's our neckline mark right here at 36.75. So maybe if it can get above there, maybe retest this and maybe travel back up to this resistance. But it's trying to come back up, but it's trading against this resistance. So let's see if it can keep building. That's a good little retest on US 30. Okay, so it came into about 50%. Can it flip the candle and then start driving again? Maybe that could be the pullback buy just for a quick little scalp to fill up maybe to that yellow line up there. Okay, so this could be a quick little scalp buy with a new 15-minute candle. Okay, so I'm going to test it out. I'm going to go in on this, and I'm just looking for it to come up to maybe trade up to that yellow line. So guys, 1 second here, just so I can measure this out for us. If it comes up to there, it could be a 30 plus pips. I'm going to place my stop loss maybe below the recent low right there. Okay, so I waited for that pullback into 50%, and I'm going to see if this 15-minute candle, yep, there it goes. Okay, so let's see if it can continue. Okay, that's about 15 pips. Up to there's 20, but yep, right up there. So I'm going to a break even right now. Perfect. Okay, up 25 pips, break even. There's, yeah, 30 pips. Quick little scalp right there. Taking out 80% right there. Boom. I just waited for a quick little pullback. That's all I waited for. How it came into 50%. Beautiful short wick, pop, fill. There it goes. 50 pips. Okay, just like that. That was a rush trade, to tell you the truth, but it was a perfect little pullback into 50%, guys. Okay, so that's 50 pips. Now you should be at a break even. You can take out a little bit if you like, or hold the trade. That's up to you. Yeah, you're paid to wait, Sean. Exactly. 50 pips. Look at that thing. All we did was it opened bearish. There was, I just drew a line, 50% tapped in. And then my next thing I looked at was the size of the wick. It's a short wick. As soon as it filled, it was a hammer candle. It's time to buy. It's MC hammer time. And it popped and it filled. And that's a good fill. This is Wall Street volume. That's now turned into 80 pips up there. Okay. Tomorrow when we're trading, I will wear MC Hammer pants and I'll do a dance for you guys when we do the MC Hammer. Okay. If you guys are old like me, you guys got to remember MC Hammer. Legend. All you young guys don't know what I'm talking about. So you got to know your culture here. MC Hammer. Yeah, you're too legit to quit. Remember those hammer pants? I had a pair of those growing up. I'll go find them at my parents' house and I'll wear them tomorrow. But guys, that's a quick boom. That's like a cherry on top for today's call. So, but that's a quick little scalp. Like, do you guys understand what I was looking for there? I wanted a pullback in the green box. I definitely wanted one in here when that candle opened, but it didn't. It was a higher low and kept driving. A higher low kept driving. This was the pullback, and I noticed it was a new 15-minute candle. It was 9:45, so it was a good opportunity to grab 30, 50, maybe 80 pips. And again, so look now, see the yellow line? That's a daily point of interest. And look at how it's strategically placed right at 50%. Okay, I'm not making this up, but this is how the volume works in trading. You see how it's like right at 50? Grab my Rananachi tool right here from the open and the close of that candle, and let's see where that yellow line is. Look, it's right basically exactly 50% of that volume, and it's a daily. So if it pulls back into here, we're looking to continue maybe to hold this uptrend right in the zone. So if you got runners running or you still want to hold the trade, you want them, if it pulls back in here, you want to hold this demand zone and continue to drive. If you lose this, then we could possibly look for maybe a sell opportunity to come back down to here, to here, to here. But that's how you can figure out if you want to hold trades longer in situations like this, okay? Oh, Barney, Bell Biv DeVoe poison. Wow. Wow. I don't think there's going to be too many on this call that know about Bell Biv DeVoe. That's now we're really getting in there. Tony, good Monday. Good. Good stuff, guys. Okay. Yeah, we took 2 trades today. One was the gold sell. Unfortunately, it's not closing above there, so sellers are still kind of controlling gold. U.S. dollar is moving a little positively, but gold could definitely turn back up, but it's still in the zone consolidating in here. Amanda, that was quick. Yeah, it's quick. Yep, it is. If we were on the 1 minutes, you know how fast it would have been? It was this candle right here. How these candles were barcoding, there's right there. Bullish ignited candle just broke. 1 minute came extended. See the first pullback, guys? Right into the top of our green box. Right there. So that was right there. See how the 5-minute candle pulled right back in? And now it's coming right back up, turned into a spin top, maybe a bullish pin bar and continue drive. But look at how easy it is to trade pullbacks in a trending market, guys. That's when you find a trending market, that's where you should be looking to buy the pullbacks. In a selling market, if it's making lower lows and lower highs, you should be selling the pullbacks. You don't always want to sell the lows. You want to sell the highs. Same with here in a trending bullish market. You don't always want to buy the highs. You want to buy the pullbacks because you're getting discounts. And look at how much drawdown did we encounter in that? Zero, nothing. So when you get good skilled at this, then you can start to increase your risk a little bit, your lot sizing, if you really want to take advantage of these moves. But it takes years to learn that, guys. It's not going to be done on one session. Okay, so we're looking now to drive back up to where that daily point of interest right there, 42,600. If it can continue to get up there, if you got runners involved, that would be a key point of interest on the daily if it can get up there. Ephraim, what do I think about 42,700 today? Oh, definitely. Yep. But we were not looking on the 5 minutes, Ephraim. If we go, let's check out maybe the hourly. Okay, so let's see here, Ephraim. Hourly, US 30. Okay, look how it's building, 42,700. So you're looking to take out that high up there? Yeah, definitely it could. We've got a nice bullish candle. If it can get up to these daily points of interest. Ephraim, also, if it can close above these yellow lines on the hourly, and then if we're pulling back and we're holding these, definitely. We could take out this high right there. What time was this? This was Friday power hour, right before the close and before Moody's released that. So right there, Ephraim. Yeah, we could definitely see it break today. Okay, and you see NASDAQ, top of the red box, rejected, came back again. Look at what it's holding. It's holding our daily yellow point of reference. Maybe if it can continue to build, we could see NASDAQ continue to go. Maybe if it closes above here, we might be able to flip this big red zone green. Gold is building right below the 200 EMA down here. But again, what I always say is prove to me that you can close like kind of above here. Then if we get that closure above there, then maybe it might be time to maybe entertain some buys on gold like above here. And maybe watch how it's building, but it could also just come up and go right back down, okay? So that's kind of what I would be watching for. If gold can close above here, then yes, we could make our way up and fill back up to there. But you see, guys, look at how beautiful that retest was, how it held. It came down, back down. It went back up, came back down, closed, took out that high, bullish pin bar candle, opened, ignited, and continued to push, okay? So definitely that is a big TP up there at that yellow line as a scalper. You know, if you're in there, I'm in there. I'm still in there. I got 20% running, and I might close out again, another 100 pips on the runner. Yeah, right there. A little extra push is 100 pips. Right there, 100 pips. So again, same situation. I closed out 80% on the move going up, the bulk of the move, and now I got 20%. Again, I'm going to go in right now, close out 10% of the 20% at 100 pips, and leave 10% running again. Sherry, you're still in it? Perfect. I'm going to take a little bit out, Sherry. I'll be paying for some knee surgeries, for some hair transplants and LASIK eye surgeries for snipers here in the group. So these pips are going towards our, as we get older, guys, we're going to need to replace our hair, our eyes, our hips. So these are pips for hips. Pips for new hips for all of us that are getting old and our bodies are breaking down over here. So pips for hips. Man, we're crazy. We're silly. Okay, we're silly, but we can be serious when we need to be, but we also have a good time here. Bitcoin, come on, Biddy. Back up to 103.5. Let's see. I want to see Bitcoin take out the all-time high this week, 110. That would be something special. Excellent. Vineet, you booked 50%, made 100 USD. Excellent. Good job. Perfect, guys. I had a great call today. Hopefully you guys did too, but now it's time to eat some breakfast. Go make a nice hot coffee. And I'll see you guys tomorrow on Zoom. Everyone on YouTube, if you'd like to join the team, we would love to have you on the team. We got 1 minute analysis provided in the Zoom with myself and Dave over here. Check out our live sessions this week. For YouTube, we're here Monday, Wednesday, Friday with you guys this week. But if you'd like to join the team, that's where the magic happens. I don't know why it's not pulling up right now. Uh-oh, something went wrong. Okay. I'll fix that. But guys, we'll see you guys tomorrow, Zoom, 11 a.m., 10:45. We'll start a little earlier. We'll get into some 1 minute price action education. And YouTube, we'll see you guys on Wednesday morning. I believe it's 11 a.m. We'll see you guys Wednesday morning. And everyone, hopefully you had a fun day on a Monday. We had a great day on Friday. Hopefully you guys all had a great weekend and a good start to a Monday right now. And don't forget, next Monday, U.S. banks are closed for Memorial Day. So that's a day off for everybody, hopefully. Maybe we'll come in just for a quick little education session, but it's going to be probably no trades to be taken because volume spreads are not going to be the great. And I don't like trading when the U.S. banks are not trading because Wall Street's not open. So we don't get that nice push like we got here in Wall Street market open. So Vineet, how to join the Zoom? Just go to our website, stocksnipertrading.com, and everything should be on there. How to join. Okay, guys? I had a fantastic call, guys. Hopefully everyone had a great day. Go outside, enjoy the weather. This is my favorite part of the day is when now I go for a walk. I got a nice hiking trail. There's a pond. I like to listen to the nature. I like to listen to the geese, the birds. Just go out for fresh air, walk around there. Then I go to Tim Hortons, grab a coffee, smoke a joint, and come back to some mid-afternoon trading, maybe, if I haven't hit my daily goal, which I have hit today. So it's going to be more of a relaxed day. I got a few things to do around the house, and hopefully you guys have a few things to do to get your mind off of these charts and go enjoy the rest of the day. But that's what trading is. That's what it is. You trade for a couple hours a day. Hopefully you make some good executions. You hit your daily goal. You manage your risk, number one. And we do this every single day. Some days are going to be rough days. We understand that. Some days are not always going to be winning days. But if you can control your risk, you're well on your way, okay? So thank you guys. I had a great time. Have a great day. Bless everyone. And we'll see you guys tomorrow. Have a good day, everyone. Thank you. It was a great call.
Recording stopped.
Hey guys, good morning, welcome to the live session of Stock Sniper Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please secure.